All right. Hello, everybody. Welcome to the official FOMC meeting stream, which will turn into the market close as well. We have a decision by Jay Powell and the Fed. I don't think it's that much of a surprise to everybody, but no cuts. No cuts. No cuts. Interest rates will remain where they are. We have paused. We are not hiking. We are not cutting. The FOMC meeting will happen in the next 10 minutes. And Powell will either give us a signal on a June cut or continuing to pause. But as of now, we are not getting a cut. So this was the most this was the most expected thing ever. I mean, this wasn't really that scary. Everyone knew that we were not going to get a pause. Now, what's interesting here is that Jay Powell releases a statement along with the Federal Reserve before they go live. And for the first 5 minutes of what he talks about at the FOMC meeting, he says basically what you're seeing right here on the screen right now. And the implication of what he is saying right here is that there is a higher chance of inflation and a higher chance of unemployment. So the reason the markets, which let me check the S&P right now, are relatively flat. I mean, they were a little red as soon as this came out, but I think they're flat right now, is based on the idea that the market's expecting Google, by the way, 8.25%, just a nasty day on Google. We'll talk a lot more about them. The markets are expecting Jay Powell to be hawkish. S&P 500 right there. There you go. Down about 0.21% on the day. 0.21% on the day. So markets are expecting a hawkish Powell. And the reason they're expecting a hawkish Powell is based on what he said. So what did he say in this new report? He says, although swings in net exports have affected the data, recent indicators suggest that economic activity has continued to expand at a solid pace. Uncertainty about the economic outlook has increased further. And he says the committee is attentive to the risk, both sides of his dual mandate, and judges that the risk of higher unemployment and higher inflation have risen. What you're seeing right here on the screen is in red and underlined something that they didn't have in the previous letter. Usually these letters are the same except for a couple sentences. In terms of those sentences, one of the main sentences is that higher unemployment and higher inflation chances are up. And as a result, that's why you've got the markets that are taking a little bit of a nosedive. I don't think this was unexpected. We all knew this was going to happen. I mean, there was a 4% chance he would cut rates. That wasn't going to happen. Unfortunately, in June, the probability is now below 30%. So based on how the comments are on this introductory statement, it seems like if he's going to be hawkish in the meeting, which from everything I'm looking at right now, it feels like he's probably going to be hawkish, then June cuts are going to further decrease. Now, if we get CPI reports that are actually really good and not as aggressive as what the market thinks they're going to be, then maybe he changes his mind. But as of right now, the data is telling him that we need to be more afraid of higher inflation and higher unemployment, which again is stagflationary, right? You have low growth, higher inflation. That is a situation where the Fed can't really cut because they're cutting into an inflationary environment. Unless you get some deflationary aspects to it, shelter, oil, potentially tariffs destroying demand, that could be deflationary, but that could also really hurt the economy, which, is the thing that everyone's trying to figure out in terms of how that's going to play out. S&P 500 right here, down about 0.2%. Jay Powell will be live in about 5 minutes, and then we will see what he has to say, and we will keep going from there. Now, at the same time as this whole Fed decision came out, Trump started talking. I don't even know where he was talking, but he was talking, and he said a couple quotes that are also affecting the market. One of those quotes is, well, I'll show you right here, when he was asked about Chinese tariffs.
China says in order to have substantive negotiations, you have to bring down your 145% tariffs. Are you open to pulling back your tariffs in order to get China to the negotiating table?
No.
Okay, so the question was, are you willing to pull back your tariffs, the 145% tariffs in particular, to get China back to the negotiating table? And Trump said no. I don't think he's legit saying we're not going to take down the tariffs. The question specifically was, are you willing to take down the tariffs to get China to negotiate better? And he said no. He's not going to say yes, right? Like, so I think people are kind of going crazy with this quote for no reason. Like he was not going to say, yes, I'm going to take down the tariffs right before Bissent goes to Switzerland and starts negotiating. B, I think that is something that has been the White House's strategy, which is, hey, we want to get them to the negotiating table. The reason we put the 145% was to get them to the negotiating table. We're not going to take that away immediately, but we all know they're going to take it away. It just might not happen immediately. It definitely might not happen over the weekend when they meet in Switzerland. And as a result of that, the markets are a little volatile right there, but obviously we're going to get those tariffs not at 145%. They're probably going to settle in my opinion, hopefully anywhere around 30 to 35%, hopefully not more than that. but he was not going to admit that he's going to let go of the tariffs right at that meeting. So that was the main quote that people were running crazy with. Outside of that, he said a couple things about, hey, we're going to be easing some of our chip policies. We don't want to necessarily pull back tariffs on China as soon as possible. He said on India, Pakistan, hopefully they can stop now and it doesn't escalate. He also said that we're going to take a look at some tariff exemptions, but you shouldn't be eager and optimistic for us to get rid of tariffs as soon as the market is expecting. Now, granted, he did let go of a lot of auto tariffs back in Michigan last week. So obviously when Trump says something, you have to assume the opposite as well. So from that perspective, his meeting was a bit of a nothing burger, but he did talk right before Powell. And that's why there's a bit of market volatility here right now. Now, he has not tweeted yet about Powell and this decision. I imagine that tweet's going to come soon, and he's going to be pretty upset that we have not cut rates. But so far, he has not commented yet on that right now. Farzad said, I appreciate that. I was under the wrong impression. Yeah, Wes, I saw the headlines. That's why I didn't even tweet out the headline that Trump says he's not willing to take out the 145% tariffs. Because when you see it in the full context, he's asked specifically in order to get China to negotiate. And it's like, why would he say yes to that? Like, there's no world in which he would say like that. Just from a negotiating perspective, he wouldn't easily say that. So, but he contradicts himself every other day. So we know the 145% tariffs are going to go away. It's just going to be a question of when. And he needs Besant, I think, to have a clean slate going into Switzerland, which was the breaking news that happened last night. And that's also why the markets were up this morning, to figure out, how is he going to navigate with dealing with the Chinese. The biggest mover of the day is Googs. So if you've not caught the Google news today, down 8% on the day, below 150. I do own Google, so I'm feeling some of the pain here with everybody else. Apparently, Apple is getting ready. Oh, here's the actual thing. It's not just the headline of Apple's getting ready to have a new search engine browser that's powered by AI. That's like the sort of mainstream headline. The actual part of this is right here. It's not that Apple's considering adding an AI provider as a search choice in Safari. It's also that Apple said last month in a testimony that happened this morning, they saw search volume on Apple going down, which has never happened before. So they admitted to the courts, we are seeing search volume on Safari go down, probably because of LLMs like ChatGPT. Also, Apple is saying they expect over the coming year, they will add other choices to search engines in the browser as LLM search products are getting better and better, aka it's not just going to be Google, just like if you're using their Siri product right now that's connected to a host of LLMs, ChatGPT being the main one, you will have Grok, Anthropic, Claude, ChatGPT, Llama, etc., which means that is what the market's really reacting to. It's that Google's really not going to have any momentum if Apple starts completely butchering the distribution that they have, which also accounts for 20% of the services revenue right now on Google. That right there is the big news. I'm still looking into it. I haven't done that much deep diving on this. It's a headline that came out 2 hours ago. The market obviously having a pretty ugly reaction, down 8%. This is the worst day for Google since January of 2024. Worst day for Google since January of 2024. It has been a long time since Google reacted the way that it's reacting, but the market is really starting to feel, hey, 55% of revenues, 55% of that 90 billion they brought in is search, and that might be under jeopardy.
Interest rates. The Federal Reserve, despite many
for there to count the ship activity and try to get a sense of what's going on in this economy.
That's a pretty good idea, actually. Have like a YouTube. We're going to go to Powell right now in Washington, D.C.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite heightened uncertainty, the economy is still in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Pardon me. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were likely driven by businesses bringing in imports ahead of potential tariffs. This unusual swing complicated GDP measurement last quarter. Private domestic final purchases, or PDFP, which excludes net exports, inventory investment, and government spending, grew at a solid 3% rate in the first quarter, the same as last year's pace. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a sharp decline in sentiment and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In the labor market, conditions have remained solid. Payroll job gains averaged 155,000 per month over the past 3 months. The unemployment rate at 4.2% remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Total PCE prices rose 2.3% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up, as reflected in both market and survey-based measures. Survey respondents, including consumers, businesses, and professional forecasters, point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of the balance sheet. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. The tariff increases announced so far have been significantly larger than anticipated. All of these policies are still evolving, however, and their effects on the economy remain highly uncertain. As economic conditions evolve, we'll continue to determine the appropriate stance of monetary policy based on the incoming data, the outlook, and the balance of risks. If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It is also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we'll balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we're well positioned to wait for greater clarity before considering any adjustments to our policy stance. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on inflation dynamics and the implications for our monetary policy strategy. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference next week. Throughout this process, we're open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
All right, Q&A, here we go.
Policeman, CNBC. Thank you, Mr. Chairman, for taking my question. A lot has happened since the last meeting. There's been tariffs put on, tariffs taken off, and meanwhile, there's a bill advancing in Congress. And I just wonder if I could press you on the last part of your statement. Are you any closer now to deciding which side of the mandate is going to need urgent care first?
Well, so as we noted in our statement, post-meeting statement, we've judged that the risks to higher employment and higher inflation have both risen. And this, by the way, of course, is compared to March. So that's what we can say. I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out. And also when they do settle out, what will be the implications for the economy, for growth and for employment? I think it's too early to know that. So, I mean, ultimately, we think our policy rate is in a good place to stay as we await further clarity on tariffs and ultimately their implications for the economy.
Hearing you describe what you're looking for in terms of being able to make a decision, it sounded like that's a long-term process before you sound like you're going to be comfortable, or the committee would be comfortable to act on what the data is telling you.
I don't think we know. I think, if you look where we are today, we have an economy that, if you look through, the sort of distortions in Q1 GDP, you've still got an economy that looks like it's growing at a solid pace. The labor market appears to be solid. Inflation is running just a bit above 2%. So it's an economy that's been resilient and is in good shape. And our policy is sort of modestly or moderately restrictive. It's 100 basis points less restrictive than it was last fall. And so we think that leaves us in a good place to wait and see. We don't think we need to be in a hurry. We think we can be patient. We're going to be watching the data. The data may move quickly or slowly, but we do think we're in a good position where we are to let things evolve and become clearer in terms of what should be the monetary policy response.
Nick.
Nick Timmerows of the Wall Street Journal. Chair Powell, there's naturally a lot of PTSD around 2021 flat shocks. But there are some who argue that the current situation has notable differences. Energy costs are down. Housing imbalances look nothing like they did 4 years ago. Labor demand appears to be gradually cooling, with wage growth running below 4%. What do you see right now that could nourish higher inflation beyond a rise in goods prices this year?
I think the underlying inflation picture is good. It's what you see, which is inflation now running a bit above 2%. And we've had basically decent readings in housing services and non-housing services, which is a big part of it. So that part, I think, is moving along well. But there's just so much that we don't know. I think, and we're in a good position to wait and see is the thing. We don't have to be in a hurry. The economy has been resilient and is doing fairly well. Our policy is well positioned. The costs of waiting to see further are fairly low, we think. So that's what we're doing. And we'll see. The administration is entering into negotiations with many countries over tariffs. We'll know more with each week and month that goes by where tariffs are going to land, and we'll know what the effects will be when we start to see those things. So we think we'll be learning. I can't tell you how long it will take, but for now, it does seem like it's a fairly clear decision for us to wait and see and watch.
So when you say that you don't need to be in a hurry, does that mean that could the outlook change in such a way that a change in your stance could be warranted as soon as your next meeting?
As I said, we are comfortable with our policy stance. We think we're in the right place to wait and see how things evolve. We don't feel like we need to be in a hurry. We feel like it's appropriate to be patient. And when things develop, of course, we have a record of we can move quickly when that's appropriate. But we think right now the appropriate thing to do is to wait and see how things evolve. There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just waiting to see how developments play out And then we'll be able to make a better assessment of what the appropriate path for monetary policy is. So we're not in that place. And, as that develops, and I can't really give you a time frame on that.
Janelle Marte with Bloomberg. So many economists have been pricing in higher odds of a recession, and several are noting that it is more difficult for the Fed to cut rates preemptively given the higher risks for higher inflation. So given the outlook, do you still see a path for a soft landing, and what does that look like?
Well, let me say, so let's look back and see where we are. So to go through 2024 up to the day, we've had unemployment in the low 4s for more than a year. We've had inflation coming down now in the mid to low 2s. We've had an economy growing at 2.5%. So that is the economy as we see it now. What looks likely, given the scope and scale of the tariffs, is that we will see certainly the risks to higher inflation, higher unemployment have increased. And if that's what we do see, if the tariffs are ultimately put in place at those levels, which we don't know, then we won't see further progress toward our goals. But we might see a delay in that. I think in our thinking, we would never do anything but keep achieving those goals. But we would, at least for the next, let's say, year, we would not be making progress toward those goals. Again, if that's the way the tariffs shake out. The thing is, we don't know that. There's so much uncertainty about the scale, scope, timing, and persistence of the tariffs. So that's that. In terms of preemption, I think you can look back at the 2019 cuts as preemptive. I wouldn't say that what we did last fall was at all preemptive. If anything, it was a little late. But 2019, we did cut 3 times. But the situation was you had a weakening economy and you had inflation at 1.6%. So that's a situation where you can move preemptively. Now we have inflation running above target. It has been above target for 4 years. It's not so far above target now. And we have an expectation, conditional on what happens, that we'll see upward pressure on inflation. If you look at where forecasters are, they're all forecasting an increase in inflation. So it makes it, and then we've also got forecasts of weakening in the economy, and some have recession forecasts. We don't publish a forecast about that. We don't publish a forecast that assesses how likely a recession is. But in any case, it's not a situation where we can be preemptive because we actually don't know what the right response to the data will be until we see more data.
Colby Smith with the New York Times. How much weakness does the committee need to see, though, in the labor market and the economy more broadly to lower interest rates again? Is it about a certain increase in the unemployment rate over a period of time, or perhaps a certain number of negative monthly job reports? I mean, how are you making that assessment?
So first of all, we don't see that yet, right? We have 4.2% unemployment, good participation, wages behaving very well, participation, I mentioned, at a good level. So, with the labor market, we would look at the totality of the data. We'd look at the level of the unemployment rate. We'd look at the speed with which it's changing. We would look at the whole huge array of labor market data to get a sense of whether conditions are really deteriorating or not. And at the same time, we'd be looking at the other side of the mandate. We could be in a position of having to balance those two things, which is, of course, a difficult balancing judgment that we'd have to make.
On that point about balancing, I mean, you've mentioned that the committee would consider how far the economy is from each goal and the time it would take to kind of get back to that point. But what does that mean in practice? I mean, how much of that assessment will be rooted in a forecast versus data dependence?
It would be a combination of the two. I mean, let's just say this would be a complicated and challenging judgment that we would have to make. Yeah, we're not in this situation, but the situation is if the two goals are in tension. So let's say that unemployment is moving up in an uncomfortable way, and so is inflation. Not the situation we're in, hypothetically, but we would look at how far they are from the goals, how far they're expected to be from the goals, what's the expected time to get back to their goals. We'd look at all those things and make a difficult judgment. And that's in our framework. It's always been in our thinking. we haven't faced that question in a very long time. So again, difficult judgment to make, and not one that we face today. And we may never face it, but we have to be keeping it in our thinking now.
Thank you. Edward Lawrence with Fox Business. So we had the CPI report that came out that showed month over month the first decrease in inflation in about 3 years. The jobs report, you said, solid, that we saw. At the same time, we have those new tariffs that we're living under. So given this, should the Federal Reserve be cutting rates at all this year?
It's going to depend. I think you have to just take a step back and realize this is why we are where we are. Is we're going to need to see how this evolves. There are cases in which it would be appropriate for us to cut rates this year. There are cases in which it wouldn't, and we just don't know until we know more about how this is going to settle out and what the economic implications are for employment, for inflation. I couldn't confidently say that I know what the appropriate path will be.
So following on that, so then how does President Trump calling on you personally, as well as the Federal Reserve, to make rate cuts affect your decision today and affect your job difficulty?
Doesn't affect our doing our job at all. So we're always going to do the same thing, which is we're going to use our tools to foster maximum employment and price stability for the benefit of the American people. We're always going to consider only the economic data, the outlook, the balance of risks, and that's it. That's all we're going to consider. So it really doesn't affect either our job or the way we do it.
Howard.
Hi, Howard Schneider with Reuters, and thanks for the time. I'm wondering, given the complexity about the first quarter GDP and what lies ahead, I'm just wondering what your intuition tells you about the underlying direction of the economy right now. Many of your colleagues have said they feel growth is slowing. If so, do you have any sense of by how much, to what degree the slowdown may be? What does your gut tell you about how things are evolving out there?
My gut tells me that uncertainty about the path of the economy is extremely elevated, and that the downside risks have increased. The risk is, as we pointed out in our statement, the risks of higher unemployment and higher inflation have risen. But they haven't materialized yet. They're not in the data yet. So that tells me more than by intuition, because I think it's obvious actually that the right thing for us to do is we're in a good place. Our policy's in a very good place, and the right thing to do is await further clarity. And there's usually things clarify and the appropriate direction becomes clear. That's what usually happens. Right now, it's very hard to say what that would be. In the meantime, the economy is doing fine. Our policy isn't, it's not highly restrictive. It's somewhat restrictive. It's 100 basis points less restrictive than it was in, last summer. So we think it's in a good place, and we think the appropriate thing is for us to wait and see and get more clarity about the direction of the economy.
Well, let me press you on this idea of the economy being fine right now, because reading the Beige Book very closely the last time around, there was a lot of negative stuff, negative sentiment that was in there. And I know that everybody's looking at soft data right now. You mentioned it yourself that the sentiment's sour. But the Beige Book was talking about the beginnings of layoffs in some industries, prices rising in some places, and an awful lot of investment decisions being pushed to the sideline. Doesn't that point to a slowdown?
It may well. It just hasn't shown up yet. And we all look at all these sentiment and read many individual comments just to get a better feel. And businesses and households very broadly are concerned and postponing economic decisions of various kinds. And yes, if that continues, nothing happens to sort of alleviate those concerns, then you would expect that to begin to show up in economic data. It wouldn't maybe show up overnight, but it would show up over weeks and months. And that may be what happens, but it hadn't happened yet. And also there are things that can happen that will change that narrative. I mean, they haven't happened, but it's possible to imagine things but in the meantime, yes, we're watching it extremely carefully like everyone is, but don't see really much evidence of it in actual economic data yet. and by the way, consumers keep spending, credit card spending. It's, it's still a healthy economy, albeit one that is shrouded in some very downbeat sentiment on the part of people and businesses.
Michael McKee from Bloomberg Radio and Television. The Fed's been criticized recently by a former governor for what he calls mission creep. You take on more problems, use more tools, and then end up building tools to deal with the fallout of those tools, which then makes it a given that you will act more aggressively in the future. Is that a fair critique, and is that something you would be looking at in your framework review?
Sorry, say the critique again.
That the Fed has been involved in mission creep, gets involved in using too many new tools to deal with problems and to go too far. Is that something that the critique was based around the fact that you did QE and QE and QE and went beyond the narrow confines of your mandate?
So, well, I mean, there are a couple. That's not really beyond the confines of our mandate. I would say this: we did things. Essentially, we're on an emergency footing for a couple of years in the pandemic, and it's very fair and very welcome for people to look back over what we did and say, hey, you could have done this better and different. And one thing we hear a lot is we could have explained QE a little better. We did think we were explaining it in real time. I completely accept the thought that we could have explained it better. There's a lot of thinking that we went on too long with QE. I can tell you that the reason we did was we were concerned that we didn't want a sharp tightening in financial conditions at a time when we thought the economy was still vulnerable. And so we did hold on for a long time to QE, and we of course tapered and everything. And then we immediately went into QT, and we're down a couple of trillion. But I get we certainly, with the benefit of hindsight, could have tapered earlier or faster. That's absolutely right. But this is all very welcome. We knew doing this in real time that we weren't going to get it perfect, and those kind of after action kind of looks are essential, and we're doing the same thing in our review. So on some issues.
The other part of that critique is that you've taken on topics that are outside of the mandate, such as climate change and trying to ensure that certain groups are benefited by your economic policies in terms of employment, et cetera.
So, okay, on climate, you've heard me say over and over again that we will not be climate policymakers, and that our role on climate is a very, very narrow one. And I think that's what we've done. We've done really very little on climate. You can say that little bit that we've done was too much, but I wouldn't want to give any impression that we've taken climate and it's something that we're spending a lot of time and energy on. We're not. We have very, very narrow things. We did one guidance for the banks, and then we did a one-time stress analysis, climate stress analysis, and that's it. And we dropped out of the network for greening the financial system. So we didn't do much on climate, but I do think, and I've said this publicly several times, I think it's a real danger for us to try to take on a mandate like that, which is very narrow application to our work. And the risk is if you go for things that are really not on your mandate, then why are you independent? And I think that's a very fair question. I do think we've done a whole lot less on climate than some people seem to think we did. Anyway, that's what I think.
Should you have taken on the question of bringing unemployment rates down for specific categories?
We didn't do that. What we said was that we never targeted any unemployment rate for individual racial or demographic groups. What we said was that maximum employment was a broad and inclusive goal. And I think what we meant by that was we're going to consider the totality of the country as we look at our maximum employment goal. Of course, we were never going to target any individual group with that, but I think some people, wanted to hear it that way. But that's not at all what we meant. So that's just not a correct reading of our. But I can see how maybe people found that confusing, and we have to take that into consideration.
Jolene. Hi, Chair Powell. Thanks for taking our questions today. I'm Jolie Kent with CBS News. You've said wait and see, and the economy is doing fine today, but the impact of tariffs are already showing up at the ports. Businesses big and small are telling us that they feel it, and most importantly, consumers say they feel it, that the challenges are here, and there's no waiting and seeing. For Main Street, what is the breaking point? What would have to happen to prompt a rate cut specifically?
Well, so we really don't see in the data yet big economic effects. We see sentiment, there are concerns that higher prices may be coming or things like that. So they're worried now about inflation. They're worried about the a shock from the tariffs, but they really haven't. That shock hasn't hit yet. Okay, so we're going to be looking at the not just the sentiment data, but also the real economic data as we assess what it is we should do. And remember, there'll be two effects. One of them would be weakening economic activity, which translates into higher unemployment, and the other would be potentially higher inflation. Again, to say it again, the timing, the scope, the scale, and the persistence of those effects are very, very uncertain. So it's not at all clear what the appropriate response for monetary policy is at this time. And and by the way, our policy is in a good place, so we think we can wait and move when it is clear what the right thing to do is. Really not at all clear what it is we should do. So people are feeling stress and concern, but unemployment hasn't gone up. Job creation is fine. Wages are in good shape. People are not layoffs, or people are not getting laid off at high levels. Initial claims for unemployment are not increasing, in any kind of impressive way. So the economy itself is still, in solid shape.
Just a quick follow-up. President Trump now says he does not plan to remove you as chair. When you heard that, what did you think?
I don't have anything more for you on that. I've pretty much covered that issue. Thank you.
Hi, thank you. Chris Rugaber, Associated Press. Well, I just wanted to follow up. Earlier, it sounded like you said it was unclear how the Fed, what kind of interest rate decisions you will make later this year. So does that, in March, there was guidance that 2 cuts might happen, 2 cuts were penciled in for this year. Is that now, that guidance from the last press conference, has that been overtaken by events?
Good question.
We don't do a summary of economic projections at every meeting, as you know. We do it every other meeting. And so this was the meeting when we didn't do it. We don't also kind of poll people. So I really wouldn't want to try to make a specific projection for where we are relative to that. We will, in 6 weeks, we have the June meeting, and you'll have another SEP. I'm not going to hazard a guess here today as to what it would be. Again, what I would say is that we think our policy rate is in a good place. We think it leaves us well positioned to respond in a timely way to potential developments. That's where we are. And that, depending on the way things play out, that could include rate cuts. It could include us holding where we are. We just are going to need to see, how things play out before we make those decisions.
Great. And just to follow up on that, I mean, when you address the issue of how the Fed would handle both rising unemployment and rising inflation, how are you thinking about the fact that addressing one could exacerbate the other? So a rate cut to reduce unemployment could worsen inflation and vice versa. How do you handle those challenges?
You just captured this is the issue with the two goals being in tension. It's a very challenging question. Now, there can be a case in which one goal is very far, one variable is very, very far from its goal, much farther than the other. And if so, you concentrate on that one. And frankly, that was the case. Well, it wasn't a case where they were really in tension, but if you go back to 2022, it was very clear that we needed to focus on inflation. The labor market was also super tight, so it wasn't really a trade-off. I think what our framework document says. It says we'll look at how far each variable is from its goal, and also we'll factor in the time it would take to get there. So, that's going to be potentially a very difficult judgment, but the data could break in a way that it's not. I just don't think we know that. The data could easily favor one or the other. And right now, there's no need to make a choice and no real basis for doing so.
Victoria.
Hi, Victoria Guida with Politico. I wanted to ask, Congress is currently debating spending cuts alongside extending the tax cuts. And I know you've talked many times about how the path of the debt is unsustainable, but given that we're also talking right now about the economy slowing, potentially even recession, I was just wondering, is there a danger that spending cuts now could slow growth a lot more?
We don't give Congress fiscal advice. We take what they do as a given and we put it in our models and in our assessment of the economy. So I wouldn't want to, speculate on that. I mean, I think we do know that the debt is on an unsustainable level, on an unsustainable path, not at an unsustainable level, but an unsustainable path. And it's on Congress to figure out how to get us back on a sustainable path. And, it's not up to us to give them advice.
Well, do you think that they should take macroeconomic conditions into account as they look at this?
I think they don't need my advice and our advice on how to do fiscal policy any more than we need their advice on monetary policy.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. In your Jackson Hole comments last year, you said you would not welcome further cooling in labor market conditions. The unemployment rate then was 4.2%, which is what it is now. Many forecasters now predict a higher jobless rate. How has your tolerance for weakening labor market conditions changed compared to a year ago?
So it was quite a different situation. What was happening last year is that over the space of 6, 8, 7 months, the unemployment rate went up by almost a full percentage point. And it was click, 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 click each month. And everywhere people were talking about downside risk to the labor market. At the same time, payroll job numbers were getting softer and softer. So there was a really obvious concern about downside risk to the labor market. And so at Jackson Hole and then in September, we wanted to address that forthrightly. We wanted to show that we were there we'd been there for inflation for a couple of years. And we wanted to show also that we're there for the labor market. And it was important that we send that signal. Fortunately, since then, the labor market has really, and the unemployment rate have really been moving sideways at a level that is, well in the range of mainstream estimates of maximum employment. So that concern has gotten a lot less. So, you're at 4.2% unemployment. I think we were in a very different situation. Now we have a situation where, the risks to higher inflation and higher unemployment have both gone up, as we noted in our statement. And we've got to monitor both of those. We actually have a potential situation where there may be a trade-off or tension between the two. Potentially, we don't have it yet, and we may not have it, but that's what we have, and that's why I think it's a very different situation.
I guess I want to follow up by asking how much of a rise in the jobless rate you could tolerate.
I can't give you I'm not going to try to give you a specific number. I'll just say we have to now be looking at both variables and which of them is demanding. If one of them is demanding our focus more than the other, that would tell us what to do with policy. If they're more or less, equally distant and equally or not distant, then we don't have to make that assessment. The assessment is you wait. So I'm not going to try to be really specific about what we need to see in terms of a number. But if we did see significant deterioration in the labor market, of course, that's one of our two variables, and we would look to be able to support that. You'd hope that it wasn't also coming at a time when inflation was getting very bad. And again, we're speculating here. We don't know this. We don't know any of these things. It's very hypothetical. We're just going to have to wait and see how it plays out.
Thanks.
Hey.
Claire Jones, Financial Times. In terms of getting some clarity, we've got some talks at the weekend in Geneva between the US and China. A lot of economists are attaching an awful lot of importance to what we hear from those talks. How much importance are you attaching to them in terms of judging what will happen to the US economy going forward? And just in a similar vein, some economists are saying days, not weeks, that we have until we start to put the US economy at risk of seeing the sort of pandemic era shortages and higher prices if we don't kind of soothe relations between the US and China. So it'd be good to have your view on that too.
So, you know, these are not talks that we're in any way involved in, so I really can't comment directly on them. So, but what I will say is this, you know, we had, coming out of the March meeting, the public generally had an assessment of where tariffs were going. And then April 2 happened, and it was really substantially larger than anticipated in the forecasts that I had seen and in our forecasts. So, and now we have we're in a new phase where it seems to be we're entering a new phase where the administration is entering into beginning talks with a number of our important trading partners. And that has the potential to change the picture materially or not. And so I think it's going to be very important how that shakes out. But we simply have to wait and see how it works out. It certainly could change the picture, and we're mindful of not trying to make conclusive judgments about what will happen at a time when the facts are changing.
And just on the fall in shipping volumes from China over these tensions, I mean, do you share that concern that we could start seeing goods shortages and higher prices in the coming weeks if this isn't resolved very quickly?
You know, I don't want to get we shouldn't be involved even verbally in questions about the timing of these things. Yes, of course we follow all that data. We see the shipping data, we see all that, but ultimately this is for the administration to do. This is, this is their mandate, not ours. And I know as you can see, they're again beginning to have talks with many nations, and that has the potential to change the picture materially. So we'll just have to wait and see.
Kosuke Takami with Nikkei. Thank you for doing this. The volume of imported goods increased significantly in the first quarter. Do you think that this situation could cause a delay in the impact of tariff on inflation? And does this mean that it will take longer time to reduce uncertainty?
The decision we made today? Which decision?
So the future decision. So the volume of the imported goods has increased significantly. So the impact on the imported inflation may delay. So what is the impact to your future decision?
Okay, so I mean, I think we think that there was a big spike in imports, right? Very big, historically large, really, and to beat tariffs. And now that should actually reverse, so that it's the difference between it's exports minus imports. So and imports were huge, and so that it conveyed a very negative contribution to U.S. GDP, annualized GDP in the first quarter, as we all know. So that could, in the second quarter, be reversed, so that we have an unusually large contribution to usually positive. That's very likely as imports drop sharply. You could also have, very likely you'll have restatements of the first quarter. It'll turn out that consumer spending was higher. It'll turn out that inventories were higher, and so you'll see those data revised up. It may actually go into the third quarter too, and so I think this whole process is going to a little bit make it harder to make a clean assessment of U.S. demand. I mentioned private domestic final purchases, which doesn't have inventories, government, or inventories, government. Anyway, it's a cleaner read on private demand, but that too probably was flattered a little bit by strong demand for imports to beat tariffs. So that might overstate. It's a really good reading, 3% PDFP in the first quarter. That might actually overstate. So it's not really I don't think it's going to affect our decisions. I will just say though that it's a little confusing, and it's probably less confusing to us than it would be to the general public as we try to explain this. It's complicated, and GDP is sending a signal, PDFP is sending a signal, it's a little bit confusing, but I think we understand what's going on. It's not really going to change things for us.
Courtney Brown from Axios. I guess, we talked about some of the indications of potential layoffs, price hikes, an economic slowdown, all being evident in the soft data. I'm curious why the Fed needs to wait for that to translate into hard data to, make any type of monetary policy decision, especially if the hard data is not as timely or might be warped by tariff-related effects. Are you worried that the soft data might be some sort of false warning?
No, I mean, look at the state of the economies. The labor market is solid, inflation is low. We can afford to be patient as things unfold. There's no real cost to our waiting at this point. Also, the sense of it is we're not sure what the right thing will be. There should be some increase in inflation. There should be some increase in unemployment. Those call for different responses. And so until we know, potentially call for different responses. And so, until we know more, we have the ability to wait and see. And it seems to be a pretty clear decision. Everyone on the committee supported waiting. And so that's why we're waiting.
Just a very quick follow-up. There was this sort of vibe session, if you will, where the sentiments expressed in soft data did not translate into the hard economic data. How are you thinking about that when interpreting some of the signs in the softer survey data?
I think going back a number of years, the link between sentiment data and consumer spending has been weak. It's not been a strong link at all. On the other hand, we haven't had a move of this, speed and size. So it wouldn't be the case that we're looking at this and just completely dismissing it. But it's another reason to wait and see. You're right, though. We had a couple of years during the pandemic where people were saying just very downbeat surveys and going out and spending money. So that can happen, and that may happen to some degree here. We just don't know. This is an outsized change in sentiment, though, and so none of us is looking at this and saying that we're sure one way or the other. We're not.
Matt.
Thanks, Chair Powell. Matt Egan with CNN. So you mentioned earlier that you're monitoring the shipping data, and we have seen in the shipping data that imports from China into the Port of Los Angeles have plunged, and that has raised concerns about potential shortages. What tools, if any, does the Fed have to ensure that prices and inflation expectations don't get out of hand if tariffs do cause significant supply chain disruptions?
I mean, we don't have, the kind of tools that are good at dealing with supply chain problems. We don't have that at all. That's a job for the administration and for the private sector more than anything. What we can do with our interest rate tool is we can be more or less supportive of demand, and that'd be a very inefficient way to try to fix supply chain problems. But we don't see the inflation yet. We're of course reading the same stories and watching the same data as everybody else. And, right now we see inflation, kind of moving sideways at a fairly low level.
If I could follow up on that, President Trump has indicated that he will likely name a replacement for you when your term as chair expires next year. But your position on the board runs through January 2028, I believe. Would you consider remaining on the Fed board even if you're no longer chair?
So I don't have anything for you on that. My whole focus is on, and my colleagues' focus is all on, trying to navigate this tricky passage we're in right now, trying to make the right decisions. We want to make the best decisions for the people that we serve. That's what we think about day and night. And this is a challenging situation, and that's 100% of our focus right now.
Let's go to Jennifer for the last question. Chair Powell, Jennifer Schonberger with Yahoo Finance. Public records of your schedule so far this year show no meetings with President Trump. Past presidents Obama, Bush, and Clinton have all met with Fed chairs, and you met with Trump during his first term. Why haven't you asked for a meeting yet with the president?
I've never asked for a meeting with any president, and I never will. It's not, I wouldn't do that. There's never a reason for me to ask for a meeting. It's always been the other way.
So would you want to meet with him if given the opportunity to get more information?
It's never an initiative that I take. It's always an initiative. I don't think it's up to a Fed chair to seek a meeting with the president, although maybe some have done so. I've never done so, and I can't imagine myself doing that. I think it's always comes the other way. A president wants to meet with you, but that hasn't happened.
And if I could just ask one question on monetary policy, when it is time to cut rates, how will you determine how far down rates will have to come to try to keep a balance on the inflation mandate as employment weakens?
I think once you have a clear direction, you can make a judgment about how fast to move and that kind of thing. So it's really the harder question is the timing, I think, and when will that become clear? And fortunately, as I mentioned, we have our policy in a good place, the economy's in a good place, and it's really appropriate, we think, for us to be patient and wait for things to unfold as we get more clarity about what we should do. Thanks very much.
All right. The summary of that FOMC meeting for May 7th, 2025 is, I don't know. We'll see in the future. I mean, that is basically what I got from this meeting. This is one of the weirder FOMCs that I've experienced, and I think you guys can get the vibe from it as well. It is not one of those FOMCs where, Jay Powell was kind of friendly or nice, or he was making jokes. It was one of those FOMCs where he looks annoyed. He looks like, quite frankly, he has no idea what the framework of an answer would even look like for interest rates or inflation or for the potential cuts. He's not committing to a single cut. Mind you, the Fed guided for 2 cuts for 2025 last meeting. Now he's kind of not even sticking to that commitment and just saying, well, I guess we'll see in the future what our summary of economic projections look like. It seems like, in my opinion, based on my dissection of what we just saw, S&P 500 up about 0.25% right here, is that Jay Powell thinks he has all the time in the world to decide when to cut rates. He feels zero certainty, at least that's what I'm feeling from here, or zero necessity, urgency to begin the process of cutting rates or thinking of cutting rates anytime soon. The June probabilities are below 30%. Let me see if they updated right now. They are, wow. They were 28% in the morning after Jay Powell speaks. 24.3%. There is a 75% chance that we will not cut rates in June. I mean, it kind of is feeling like 2024, where we thought we were getting close in May, June, July, and then we didn't end up getting a rate cut until September. Obviously, we've got a lot of tariff volatility, so that adds a whole nother dimension in terms of how Jay Powell's going to figure out what the right time is to cut. But if I was a betting man, if I had a gun to my head, I would say we're not getting a cut in June. Nothing, unless CPI is just like horrendous next week in a good way, right? So we're at 2.4. I mean, the Fed wants to get to 2. If we come in at like 2.1, I would hope Jay Powell thinks, hey, maybe this requires some cutting. But if we stay stuck at 2.4, 2.3, I don't know if that's going to be enough for him to kind of switch the tone that he had today. And this tone, again, was a tone of basically, I don't know. We'll look at the data. When Jay Powell was asked on if we're going to get rate cuts at all this year, he says, not sure. We will look at the data. When he was asked what is the appropriate unemployment rate that would be necessary for us to cut, right now we're at 4.2%, Jay Powell says, I can't give you a number for that. I mean, why in the greatest economy in the world can our central bank not give us a number for when they're going to think of cutting? And I get that they can't be literally, giving us every single detail that we want. But at some point, this should be obvious that, well, if employment gets to 4.5, 4.6%, you're probably going to cut. Why is he refraining from giving us that data? I know why. It would make him accountable. And, this is not me bashing Jay Powell. I love Jay Powell. I think what he's done over the past couple of years dealing with Trump and Biden and all the money that we printed. Yes, I know he was late in 2021 when it came to inflation, but I think he did a good job in 2022, 2023. I think he's done a good job as a Fed president. But when you can't give us basic answers to some of these questions, it gets people to be annoyed. It gets people to be very annoyed, especially when a lot of the answers were rooted in this idea of, hey, we're just going to look at the data. Now, to give Jay Powell some credit here, he's dealing with a very uncertain environment. What is the environment he's dealing with? He's dealing with China tariffs at 145%. That still are in place. He's dealing with universal 10% tariffs across the board with an average tariff rate of about 22%. And he's also dealing with an administration that, quite frankly, does not care about anything other than imposing their agenda, which is the agenda of a new economic world order for trade policies. And as a result, Jay Powell's argument is, hey, I'm not in any position to feel the pressure or to feel the urgency to give you guys specific questions or specific answers or any resemblance of when we should get you specific details on a rate cut, because this isn't my fault. All of this has to do with Trump, is what I think is the vibe from Jay Powell right now. And, you can hate that, you can love that, but that is, I feel like, objectively what's happening right here. Jay Powell basically shifted. I mean, even on one of the questions he was asked, he was like, that's a question for the administration, not for me. He's kind of saying, hey, you could ask Trump about that. This administration has a whole different way of thinking about this stuff, but I'm not going to give a comment here because, he probably doesn't have a comment to give. So although I'm a little annoyed that I feel like we should get some more specifics from Jay Powell here, especially in the context of like, hey, you said 2 cuts last time. You didn't give us any summary of economic projections this time. Can you at least commit to 1 cut? Oh, no, we'll look at the data. It's like, all right, if we're always going to look at the data every single meeting and we're never going to give any level of assurance to the market, then how's the market supposed to interpret that? The 10-year right here, 4.277, down a little bit on the day, which is good. Stocks are relatively flat. S&P 500 up about 2.25%. In the midst of Jay Powell not really answering anything, I also can't give him that much pain for not doing that because Trump has created an incredibly volatile market and we don't know what the hell's going to happen with the tariffs. So, I understand Jay Powell's hesitancy, although I do think it's kind of obvious with oil below 60 that maybe cutting rates would not be the craziest idea in the world. Because again, here's the thing. Here is the thing. And for all the people that are not fans of Jay Powell, which again, I'm a fan of it. I've never been anti-Jay Powell. But here's the thing for all the people that are not fans of him. This is the argument that they've been saying over the past couple of years now. Jay Powell was late in 2021. He was late. He messed up. We had to deal with everything in 2022. I don't really blame him for that because it was really hard to navigate 2021, given that Trump and Biden printed $10 trillion. So I give him a little bit of a pass there. The people that don't like Jay Powell are worried that he's going to be late again. And they are not giving him the same pass I'm giving him in 2021 because they thought he was bad in 2018. He was bad in 2019. Like they feel since the beginning of when he was elected as a Fed chair, he's always been late. If we end up in a slowdown, which so far the economic data is not showing that in terms of every single piece of data you look at, non-farm payrolls not showing a massive slowdown, but then oil prices could be signaling a slowdown, right? As oil prices come down, even though that could potentially increase demand for travel. There's so many different nuances to all this stuff. But the point is, if there is a slowdown, and it was kind of obvious based on different things we looked at, like consumer confidence surveys, oil prices, etc., and Jay Powell is late to cut rates, people are going to blame Trump. People are going to blame Jay Powell and they're going to blame Trump, but they're going to, I think, also start to blame Jay Powell. Like a month ago, April 2nd, after Liquidation Day, Liberation Day, everyone felt this was Trump's recession. Now that we recovered most of that pain and we're basically at the April 1st levels that we were at before, or April 8th levels, or well above, right before the April levels when we had that 6% down day on the S&P. The fact that we recovered that back at 560 right here, now people are thinking, okay, it's back to Jay Powell. It's not Trump's recession anymore if it does become a massive recession. I think both of them will bear the blame if Jay Powell's late for this. Obviously, Trump's going to bear the blame because the tariff started this whole thing, but it's not going to unilaterally be on Trump anymore. And I think that's the big thing right here. So, I mean, look, if you think Jay Powell is late again, and if he's not cutting in June, which I think would be a horrific mistake, but let's assume they're not going to cut in June based on the Fed probabilities and based on how hawkish he was, then the next earliest cut is what, August? Do we have a July FOMC meeting? I think the next one is, yeah, we do have a July one. So we don't have an August one. We have July and September. He either cuts in July or he waits till September, which would essentially be like what he did in 2024. And if he waits till September and the broader market sees forget the market, the economy sees a real slowdown, I think people are going to be wondering why he didn't cut. Also, did you notice when he said we were probably late in 2024? Did you guys catch that part? He did say we were late. Or I think he said the word we were probably late in 2024. Most people thought they should have cut back in July. They ended up waiting until September. And I think there was a moment where he admitted that we were probably late in 2024. So it's not like, the Fed has always gotten it perfectly. And obviously right now it seems like people are afraid that they might mess it up again. We also had that negative GDP quarter. Yeah, I mean, that's another thing. If we get another, look, I don't think we're going to get another negative GDP quarter in Q2 because the majority of the negative GDP for Q1 was the pulling forward of the imports in Q4. So I think Trump's going to be able to get away with not having 2 negative quarters in a row. if we somehow get a negative Q3 after a positive Q2, which is estimated to be at about 2.4%, then I think we got a real slowdown happening. And that's when people are really going to get upset if Jay Powell doesn't cut rates. But we're going to have to wait a couple months to see if that ends up playing out in that way. Let's do a poll in the chat. How many people think Jay Powell is late for not cutting or he's doing the right thing? Is Jay Powell late on cuts or holding steady makes sense? Let's see. Time to cut, hold. I don't think he's got to do an aggressive cut either. 25 bips is not crazy. 25 bips is not crazy at all. You got the federal, remember, CPI is at 2.4. I mean, I don't think April we had massive inflation. We had inflation on some products with tariffs, but we really need to go through May and June to see what the impact of that was, because April, they were announced April 2nd. They were taken away April 10th when Trump got rid of the iPhone tariffs and then the laptop tariffs. I mean, there were so many different things happening in April. So I don't think tariffs had the massive impact that the Fed might be thinking they had on inflation, which means if we're at 2.4 headline, let's say we stay at 2.4, the Fed's funds rate is at 4.5. I mean, that is just under double the headline CPI rate, which is not good. And if we get to 2.3, 2.2, because oil came down in April dramatically, I mean, like, dude, 4.5 is going to legitimately be 100% above CPI, which it just makes, when Europe has freaking 7 cuts in a row and they're at 2.75, it's not going to make a lot of sense. A lot of people are going to be wondering, hey, is this political? What's going on? Right. And so I think if we get a good CPI, hopefully that changes the probabilities for June. But as of now, it does not look like Jay Powell wants to cut. 52% of you say time to cut. 48% of you say hold. So it's almost 50-50 on cutting versus holding. Papa K, thank you for the $20. Thank you for all you do. You're a great communicator. Appreciate you, sir. And thank you for being here and being part of the stream. Timbo, thank you for the $10. Just wanted to say, amazing job on the Bloomberg interview. We all listened to you babble on for hours. So it was really nice to hear a clear, concise bull case from you. I appreciate it. I also enjoyed 5 minutes of just getting my points out there versus babbling on for 6 hours in a row. Thank you both for those super chats. Okay, so we are getting into the market close. We got a lot of earnings today, folks. A lot of earnings. We don't have any crazy, from my understanding, big companies reporting today. So we're not going to be listening to any calls. We're just going to get through the earnings. But we have ARM, AppLovin, Mercado Libre, Oxy, Carvana, Axon, Fortinet, Dutch Bros, IONQ, Symbiotic, AMC, and Joby. Zillow as well. So we've got real estate. We've got Honest. We have biodegradable diapers. We have Carvana, used cars. We have Oxy. We have gas. We have Quantum with IONQ. We've got AppLovin, which who the hell knows what AppLovin does? I'm just kidding. I think they do ad tech or something like that. We got Mercado Libre with Latin American Amazon. We got ARM with semiconductors. We got Fortinet with cybersecurity. We have Dutch Bros with coffee. So it is a very diversified set of earnings that we have today. And we're going to be looking at all those. Are you in any of the companies who are reporting? So put that in the chat if you own any of those names. I am in none of them, from my understanding. And we'll talk about Google in a second because that's the big headline of the day. But I am in none of these companies. So, yeah, I don't have anything on the line here today. Farzad, thank you for the $10 super chat. It may come out with merch. I will rep it so hard. Appreciate you, Farzad. I've never had merch. I don't know if I would ever launch merch. I kind of just like, I kind of just like never having to sell anything. That's why I never kind of came out with a full-on merch line. But I just appreciate you guys being here every day. Although a lot of you guys have been asking for a cowbell as like real merch. So who knows? Maybe one day. But I just appreciate everyone's attention, being here every day. I am not the CEO of AK Media. You guys need to stop with this. I was 2 minutes late, and all I see in the chat is puts on AK Media, puts on AK Media. We need a new CEO, get a board of directors to vote him out. It's just hilarious. And now every time I go on TV, if we continue the TV appearances, I'm just going to have to say I'm the CEO of AK Media. Like, we're going to have to keep the joke running in order to keep the meme alive. But there is no freaking AK Media. I appreciate everybody, though. Thank you all for being here. All right, Google. We got 30 minutes until the market closes. Let's talk about Google. This was a horrendous day for Google. I own Google. I have 2 calls that are, underwater is not even the word. I have 2 in the money 150 calls. I paid $6,000 of premium for them back in January. I did it because, well, Nancy did it. And I was like, you know what? Nancy's not going to be wrong on this. Well, Nancy was wrong. And so obviously, my bet was that Google will be about 210 by January 2026. Could that still happen? Sure. But given the price action we're seeing today, given the headlines we're seeing today, it looks like I'll be doing some tax loss harvesting on those Google calls. And then I have 100 shares as well. 149 on Google, down 8%. We have not seen a quarter like this or a day like this since January 2024. And again, the reasoning for this is simply because Apple is saying the Safari searches that all lead to Google are down year over year for the first time in 20 years, and other LLMs to be able to help them to improve their search products. So let's get a little bit of coverage right here, and then we'll keep going. But this has obviously been a rough and ugly day for Google. I have not bought the dip yet, still looking into it, but one of those things where if you're long Google, you got to find a way to look past this. It's just a little hard right now if search revenues continue to get hit in terms of their growth rates.
In short, what I make of it is this is essentially a Google investor's worst fear come true. Let me go back and tell you what was said. In testimony today, as part of the DOJ search case, Apple VP Eddie Q, he dropped these bombshells. He said Safari searches declined for the first time in April, adding that Apple is now exploring adding an AI search option, naming Perplexity and Anthropic as possible partners. Q even admitted that he has lost sleep over the possibility of losing Google's payments. Now, those payments, which are worth over $20 billion a year, that helps Google maintain its service.
The senior vice president of services at Apple, in a testimony today, explicitly says, I have lost sleep over the fact that we could lose Google's search revenue, which is about $20 billion a year. It's 1/5 of the overall services revenue for Apple. I mean, dude, that's just not a pretty statement. Apple stock, by the way, also down 2%, Google down 8%. Both of those just getting hammered on this news.
Search dominance by ensuring that it is the default on Apple devices. If Apple starts rerouting users to alternatives, even in part, that threatens Google's most profitable business, search ads. Always comes back to search ads. It also fulfills the innovator's dilemma that has been looming since ChatGPT went viral years ago, that Google cannot or will not cannibalize its search business for an AI chatbot alternative as user habits change. And the fear was always that habits would change quicker than Google was able to move. Now, Apple is arguably the single most valuable gatekeeper of consumer behavior. So if it sees the writing on the wall and starts experimenting with AI first answers, Google risks losing both traffic and that default status. So this is no longer just a legal or regulatory risk. This is a structural one. There's irony here too, guys. Over the last few months, there's been this growing acknowledgement, certainly in tech circles, that Google is moving faster than ever and collecting more AI wins. Its latest Gemini model has climbed to the top of AI leaderboards, outperforming OpenAI and others. It is also aggressively embedding AI across Android. We're seeing more ad and YouTube AI tools. It's landing big customers in cloud, but it comes down to this. Search is still the cash cow that funds everything else. Google is trying to turn this ship through experimental AI search hybrids like AI mode, which has been expanded, but that may not be fast enough. And this certainly creates a whole new huge wrinkle ahead of that big developer and AI event later this month, Google I/O, which, guys, was looking like it would be more of a celebration, a time for Google to talk about all of these wins. But these comments from Apple and Eddie Q pour a whole lot of cold water on the idea that Google may be catching up because it's.
All right, what do you guys think? I put it in the chat. Is Google cooked? Yes or no? I mean, look, dude, I think obviously this is not good news for them. I think the market's being, the market's doing what the market does, right? The market's emotionally reacting to something that is not even real yet, but it's a headline that they feel could hamper future growth expectations. I don't think Google's cooked, though. To say Google's, to deny the level of profitability, free cash flow, net income, other bets that they've made like Waymo and Apptronic that are just beginning to just not only beginning to grow, but beginning to get some level of respect from the street in terms of what self-driving could look like as an industry, what robotics could look like as an industry, Gemini, GCP, cloud. I mean, there's a lot of parts to this thesis that are, I would say, undervalued. However, 72 out of the 90 billion that came in the last quarter was on advertising. 55% of the 90 billion came directly through search. I mean, do we think search dies over the next couple of years? No. Do we think search meaningfully declines against LLMs? I think it's hard to say no as well. The question is what percentage? I mean, if search declines 45% against LLMs, aka LLMs in general, XAI, Llama, ChatGPT, whatever it is, take away that search volume, yeah, that's bad for Google. If it's like 5%, I don't think that's that big of a deal, especially because Gemini and Google Search, AI overviews, et cetera, can start to take back a lot of those search volumes as well. If they lose Apple, though, I do think that's bad. Like, there's nothing good about that, losing Apple. That's $20 billion a year that Apple is losing, but that's, I don't know what the ROI on that 20 billion is, but I would imagine it's at least 3 to 4x what Google pays on it, just in terms of the pure distribution that they get from people searching things on Safari. So look, it's not a good thing. I think we got to go a lot deeper into the numbers, see what the actual implications of this are. Does this mean they have to get rid of Chrome? If they get rid of the Apple stuff, do they get to keep Chrome? How do they kind of negotiate a settlement with the DOJ in terms of resolving the illegal monopoly that they have been found guilty of in terms of having in online advertising in the United States? What does this mean for their international business as well? They're already getting fined by Europe for about $6 billion. I mean, there's a lot of stuff going on with the thesis. I just don't want to say Google's dead because of this. I mean, it's just hard to say a company at their scale and their magnitude, and YouTube, which we're all discounting as well, that YouTube, the platform we're on right now, is completely dead because their search revenue might start to decline in growth. And it's already started to decline in growth, which is probably why the multiple is trading where it's at right now. But how much more does that decline continue to persist on over the coming years? Here's Josh Brown's take. He was big in Google last year, sold out of it, bought Netflix about a month ago. Here's what he has to say about these headlines today.
It's not that Google now disappears. Google has a steady business that will consistently be a good business. It's that the duopoly that we've become accustomed to over the last 10 years of Meta and Google being, 70, 80% of online ads, that is now what's in question. And to act like this isn't a watershed moment, I think is to ignore the how powerful Google has been since even before it came public. So just, and you could play back my comments from the last 2 weeks. I've been saying this for the first time, Google finds itself competing in core search. It never had to compete before. It came public in 2004 after the first wave of search engines all disappeared, and it was effectively Yahoo and MSN left on the board. And so Google came public 21 years ago. They had dominant market share, and they never lost it. We've never seen Google really fight for, they've been fighting on other battlefields like cloud. They've been fighting on workplace productivity with the G Suite. So it's not that they can't compete. They never had. This was in the bag. Basically, Google could go into any business that they wanted to go into because they had a money printing machine in the basement, and it was never in question. And now what we're seeing is the Gen Zs are going to ChatGPT first. They don't want a list of blue links, which is basically a treasure hunt. Here, go find the answer. They just want the answer. And it's not that Gemini is not delivering that on the top of their search query results. It's that Gemini is not doing that by themselves. There are other competitors that have gained a meaningful amount of mind share, market share, search share, inquiry share, however you want to phrase it. And it's the first time that we've ever had to worry about the money printing machine in Google's basement being 95% market share. So they don't compete on traditional search. This is important. There's a company called DuckDuckGo, and then there's Microsoft's Bing. Those are not the competitors. The true competitors are these standalone AI services, and they are growing increasingly complex.
I would agree. The competitors here are not DuckDuckGo. And put in the chat if you use DuckDuckGo. That's like your private version of Google. They're not tracking you. They do have ads, but the ads are supposedly not tracking the cookies in your browser and all that stuff. But I think the competitors here are the LLM products, not necessarily the search browsers. I just, it's, first of all, Google allocated $70 billion to buybacks. I mean, I think today would be a day where they start deploying some of that money. So I could definitely see Google taking advantage of the 8% dip today, which again, we haven't seen since January 2024. Number two is, this is a question of if you believe in Sundar or not, right? This is a question of, hey, do you believe Sundar will be able to pivot the company away from 10 blue links, which eventually, maybe not in the next 5 years, maybe not even the next decade, but eventually 10 blue links will be gone, right? And so if those 10 blue links are going to be gone eventually, the question is going to become, what do we end up using? And if Google is still a formidable player in whatever we're using, I would imagine the market's not going to be as disrespectful to the valuation as we're seeing right now. We got a green candle on Google. You can see right there, 149 to 151. Let me see is Trump talking? What's going on? NVIDIA, are we up 2%? Oh, hold on. What's happening? NVIDIA breaking 116 is something's happening. Hold on. We should be getting something really quick. It's either algos in the last 20 minutes of the day or Trump just said something. I don't see anything on his social. I don't see anything on my news sources. No, nothing from Trump. Nothing from Bloomberg. Trump just bought Google. Yeah, that's why it's pumping. Wow, hold on. NVIDIA, 117. What's going on here? S&P up almost 1%. Where's Palantir? Palantir back to 110. Where is Hoodie? Hoodie, 49.67. SoFi back to 13. NVIDIA, though, being a monster, 3%. I don't have the news. I don't have a reasoning. I don't have nothing Powell said was bullish. So is this really an algo pump on FOMC day? Is that what's happening? I don't see a single. Oh, hold on. I think we got it. I think we got the news. This officials ready repeal of AI diffusion rule launched by Biden. NVIDIA has objected to the rule and pressed the U.S. for its reversal. There you go. There you go, baby. This is why Jensen paid $1 million to be at a Trump dinner. Officials ready the repeal of an AI diffusion rule launched by Biden. That right there is getting NVIDIA to get some momentum. That's pumping the whole market right there. That is being confirmed right now by Bloomberg. Let me see if I can get some more coverage on this real quick. But that's it. That's primarily an NVIDIA pump, though. That's just if NVIDIA pumps, the rest of the market pumps. I wonder how much the market respects this, if it fades this or if it actually keeps it going. That's why Google, wow, 152, 149 to 152. Not too bad, dude. I mean, it looked like Google was ready to go back to the 145s 30 minutes ago. Apple right here, 196. This one also getting a little bit of recovery. That was down 2%. Now it's down only 1%. Tessie right here, 276. That's basically flat on the day. Trump posted about China. He just posted, congrats to our new ambassador to China, David Perdue. Okay, so he just posted a video congratulating his new ambassador to China, which is not really like news, but given Besant's talking to China this week, maybe in general, they're starting to de-escalate a little bit more. And that's what the market could be pumping on. Micron right here is up about 3%. This is our watch list for today, 5-7. Carvana, AppLovin, Symbiotic, Honest Arm, Mercado Libre, AMC, Joby, Oxy, IONQ, Axon, and Fortinet. All of these relatively flat right now. None of them really moving. ARM's up about 1%. Mercado Libre is up about 2%. And then Carvana right here up about 0.5%. But nothing else crazy happening right now. Now, let me look up the diffusion rule because, wow, NVIDIA 117. I kind of know about it, but I don't really know about it, to be honest. So let me look it up and get a little bit of a summary right here. You know what? This is when we use ChatGPT. This is when, or let's use Grok. Okay, so in 2 sentences, tell me about the NVIDIA diffusion Biden rule. All right, so if Trump is repealing this, let's see why exactly this is good for NVIDIA. So here we go. Grok says the Biden administration's AI diffusion rule implemented in January 2025 imposes restrictions on exporting advanced AI chips to most countries, aiming to maintain U.S. and allied control over AI technology while limiting access for adversaries like China. NVIDIA criticized the rule as misguided, arguing it threatens global innovation and U.S. technological leadership, potentially impacting their market dominance in AI chips. Now I remember this. This rule, I remember posting about this the day after Trump got in office. And NVIDIA put out a blog post, I remember, the day that Biden was basically signing his final executive orders, all of his pardons, etc. And this was one of the last ones that he tried to put into law. We all kind of knew it was eventually going to be replaced. And NVIDIA put out a blog post that NVIDIA usually doesn't get political, but they put out a blog post and they said, hey, this is stupid and we need to do something about this. 5 months later, there you go. It looks like Trump today is doing something about this. Now, Couple that with the fact that Besant's going to meet with the Chinese vice premier in Switzerland. NVIDIA right now is being used as a pawn inside of this trade war. If you get any level of a framework for negotiations where Besant says, hey, we'll let you buy some NVIDIA chips, but you guys have to stop XYZ, maybe the Chinese say, you know what? If we don't have these NVIDIA chips, America's going to become a leader in AI. If they really want us to buy another $500 billion worth of goods, then fuck it, we'll do it. As long as we, dude, I'm getting passionate. The F word just came. I haven't cursed for 2 hours. The F word came out, right? But there were, if we need that much AI dominance, then screw it. We're going to buy some of their goods and we're going to allow NVIDIA to enter into our economy. I mean, that could be something that happens, and that's another reason why it's pumping right here. S&P 500 up about 0.39% here right now. So it could go the opposite direction. Besant could get into that Chinese meeting and say, hey, you guys aren't going to get any AI chips. We're going to let other countries, buy NVIDIA chips and get rid of the Biden diffusion rule. But you guys, aka the Chinese, we don't trust you guys at all. So you guys have no access to the Blackwells or the Rubins or the Hoppers of the world. And then, China might get pissed off and they say, screw it, we're not going to buy more soybeans or whatever. So there's a world where maybe Jensen behind the scenes has been talking to the Trump team and been saying, guys, if they don't buy our chips, Huawei eventually is going to sell their chips. You'd rather have an American company make money, and we're just going to be so much better at AI than them that it doesn't matter if they have our chips, because ultimately you need other tech companies. You can't just have people buying chips to buy chips for the hell of it. You need to actually do something with the chips, and you should trust enough in American ingenuity and entrepreneurship and the OpenAIs and the Googles and the Metas of the world to allow our chips, or to allow them to implement our chips in a meaningful way, and also allow the Tencents and Alibabas to buy our chips. Let NVIDIA, an American company, make money, but also have enough, confidence that Tencent and Alibaba and ByteDance are not going to beat Meta, Google, and Amazon. And if Jensen was able to convince them of that perspective, I mean, maybe there's a world where Trump's like, you know what? That's the right thing to do. And as a result, that's why NVIDIA could be seeing this momentum. That's big, dude. That's big news. Did not expect to see that today, but there you go. That is very, very good for NVIDIA. NVIDIA right here, 116.02, up about 2%. Currently here right now. All right, we got about 10 minutes into the close. We got a lot of earnings to look at. VST, I did not know they had earnings today. All right, that's a data center play. We will add VST to the list. Vistra, some other companies that I might have missed. Kratos, that's a defense company. We'll add them. So defense tech has been catching a bid recently. We'll see how they report earnings as well. Kratos right here, down about 1%. Mercado Libre right here, up about 1.6%. Currently, right now. We have Honest. Do I have Honest on the list? Do I have Honest? I don't have. No, I do have Honest. Still don't know why you guys love Honest, bro. This is such a small cap. They sell diapers. I get it. Jessica Alba's pretty. I understand, but still, we'll see what happens. I mean, they pumped last earnings and then they dumped after. I don't know how much liquidity is in this name, but we will take a look at them. And then AppLovin, that's a big tech company in the ad space, down about 1.2%. So we will take a look for this as well. All right, let's get back to a little bit more of the Fed coverage. I'll try to get some more updates on NVIDIA, and then we'll keep going from there. But we got about 10 minutes, and then we enter into earnings madness today on May 7th.
What we just heard, I think the headline really is obvious today, and it is this tension that may exist between the two mandates that the Fed has.
Yeah, and we've talked about that last couple of times that we've met on Fed Day. I think the word of the day in the press conference is uncertainty. I mean, he said it's too early to know, don't think we know, phrases like that all the time. So I can't really blame him. I mean, we are in sort of uncharted waters we don't know what the tariffs are going to do to inflation. There is pressure a little bit on the rising unemployment rate, which I'll talk about in a little bit. Mm-hmm. But I really felt he did everything but invoke the Hippocratic Oath regarding the Fed funds rate. Above all, do no harm. Right, because he says we're in a good place over and over again.
Over and over. He said that multiple times in exactly those words or versions of.
Yeah, but he refuses to answer, and I can't blame him for this either. Questions of what would the unemployment have to go to, which one's going to be a problem first, and so forth. So he says, wait and see. We're in a good place. We can wait and see. But I think that it's a little bit of uncertainty. I'm surprised the market didn't act worse on the stock market, because it sounds to me like we're back in Mr. Magoo land, where we're in the car, driving around, and he admits that there's risks, higher inflation, higher unemployment rate. But he says, I'm not going to, I can't explain to you what we need to see to get concerned about one side of the mandate or the other. So we're just going to wait and see which tree we bump into. So I feel like we're going to bump into either a tariff inflation tree, we're going to bump into a rising unemployment tree, and that will affect what happens to the Fed funds rate down the line. But the unemployment rate is rising. I mean, it's above its 36-month moving average, and that goes along with recession. It's also, the unemployment rate is also above its 12-month moving average, and the 12-month moving average is important too. But also,
this is why I was a bit annoyed right here that Jay Powell didn't give us a meaningful response to the question around what unemployment rate is going to be necessary for a cut. I mean, you've got unemployment that's up about 1% in the past 8 months, and you've got unemployment rate that's above its 12-month moving average. Dutch Bros as well. We have earnings today, so we'll take a look at Dutch Bros. They're down about 0.5% right here. So what Jeffrey is saying right there is that, hey, you have the hallmarks of an uncertain environment that are characterized not only from a qualitative perspective, but also from a quantitative perspective, just looking at the raw data that we are seeing. Yes, non-farm payrolls was good, but one or two good non-farm payrolls does not mean there's not a systemic trend of a broadening of unemployment across the entire economy. And, different sectors get hit worse than other sectors. And as a result, it just seems like Jay Powell's ignoring that. Or he's thinking we have way too much time to wait until I give a definitive answer on this stuff. And, the market's thinking that maybe you don't have as much time as you think it is. I mean, I've spoken to multiple people, at least in the past, I would say at least 5 people over the past month that have personally told me, and I'm sure you guys have the same experiences, of layoffs, like people that they know, their friends, their family, the local pizzeria. Like I've heard a couple of these stories, and that doesn't mean there's a trend across the entire country. But to say that it's not there, to say that it doesn't exist is ridiculous, especially when we saw in the JOLTS data, we went from 7.5 to 7.2 million jobs available in the country. That's 300,000 jobs that disappeared in a month. If that number comes down to 6.8 thousand or 6.8 million next month, I mean, these are jobs that are just not available anymore. You couple that with layoffs, you're going to have an unemployment rate that goes higher, along with the fact that Doge has meaningfully cut the workforce of the government as well. And that's also obviously not a good thing for the broader unemployment rate either. NVIDIA right here again, if you're just joining, the big headline on NVIDIA is that they are likely going to get the Biden rule rescinded. NVIDIA, that pump is getting faded. It went from 117 back down to 116.8. It's holding on a little bit, still up 2.3%. Broke out from that 113 range it was stuck in most of the day. But the Biden era diffusion rule that he signed literally 2 days before he left office in 2025 in January basically stopped NVIDIA from selling to a lot of different countries. And based on whatever the Trump administration's conversations were with NVIDIA, seems like that's going to be repealed. Is AMD pumping on that? Because why wouldn't AMD? Yeah, AMD's up 1%. I mean, I don't know if it only affected NVIDIA, that diffusion rule. I would imagine it affected the other semiconductor companies. So all the semis theoretically should be green right now. Yeah, pretty much all. SMCI is the only one that's down 2%. It was down 8% in the morning. On semiconductor, that's flat. Marvell's down 9%. They delayed their investor day. That's why they're down 9%. ARM, we have earnings after the bell. That's up 0.3. What a great day for ARM to report. I mean, that's just beautiful semiconductor news for ARM to report into. You got Dell, that's up 2%, AMD up 1.1, and then NVIDIA right here, 116.32, that's up 2.45% right now. TSM as well. Where's TSM? TSM, that's up 1%. And then Broadcom, that one is also up 2%. Where's Robinhood? Robinhood, 49.94. Where's HIMS? HIMS and Hoodie. HIMS having an incredible day, up 5% after being up 20% yesterday. So, I mean, if you own HIMS, you're probably very happy. If you've taken some profits, I can't blame you. It's a nice 25% in a day. It's like a 75% from the lows of 3 weeks ago. And it's done very well. And then you have Hoodie that's trying to break through 50. There's a lot of technical resistance at 50. It's breaking through right here. It got back to 50 in the morning, but 50 is turning into a real level of resistance for Hood. So we're going to need some daily closes above 50, at least over the next couple of weeks, to see if we can solidify 50 as actually serving as support versus resistance. And it was support for like a month or for like a couple of weeks inside of February. And then, as of now, it turned into resistance. Tempest AI also had a good day. They had earnings yesterday after the bell. Tempest right here, up 12%. They are still not profitable, but they beat expectations by about 30%. Healthcare AI company. I mean, there's a lot of companies you can buy that do healthcare AI. Tempus is a very independent vertical of healthcare AI. And so their, I guess you could say, moat is that they are singularly focused on AI applications in hospitals and for pharmaceutical research, et cetera. Nancy is big on this. Kathy Wood is big on this. This stock right here, 13% up on the day. Okay, so these are the earnings that we have after the bell. We got 3 minutes. And then we turn into complete madness. Let me know which one of these guys you own. Carvana, AppLovin, Symbiotic, Honest, ARM, Mercado Libre, AMC, Joby, Oxy, IONQ, Axon, Fortinet, Vistra, Katos, and then Dutch Bros. Those are the big ones that we have today. Kratos, Dutch Bros, and then you have all those companies. I don't know any of them. So I would love for all of them to go green and for everyone to make money. But those are the ones we are looking at. I see a lot of bros in the chat. I see a lot of Fortinets, actually. Interesting. I see a lot of Honest. All right, Honest. You guys love that one. We'll see what Honest ends up saying. And I actually see some Carvanas right here in the chat. I see some Carvanas as well. Real quick, let's get some coverage on this NVIDIA news if we can get it, and then we will get right back into this as we close out the markets.
Debate, which is a very interesting outcome here.
Yeah, so we're still waiting, I guess, to get some details filled in there, get it confirmed. But I do think the market responded to it, at least in a quick flash higher for those affected stocks. And I think it kind of tells you where we are. Yesterday, we had this kind of phantom pop when there was talk of progress on China talks. Today, you had a pullback when the president said he's in no mood to change the 145% tariff level on China. So this is the world we're in. I do think that Powell succeeded in making almost no incremental news and essentially saying, we want to wait and see. We're going to wait and see. We're manning both fronts. Nothing to see here. And I think the market was mostly there. Given what's happening with Alphabet and Apple, I would argue the tape is hanging in there pretty well. Breadth is positive. We've rotated toward other stuff away from those stocks that are getting hit so much.
Yeah. What'd you make of what you got from the Fed today?
All right, here we go. You had the China news yesterday. You had Powell today. And then you got this NVIDIA AI news at the very end of the day. All of those culminating into 15 different companies that have earnings. And we are going to see the implications of all different sectors, the energy sector, the consumer sector, cybersecurity sector, semiconductor sector. We've got a lot of stuff to go through over the next hour looking at all these earnings. Thank you, everybody, for being here. Wednesday, May 7th, 4 p.m. The stock market is now officially closed. All right, there you go. We are closed, and now it is time to see how the market reacts. Robin Hoodie right here, $49.95. Looks like we got that close on Hoodie, and then Hims, $52.30. Wow, Hims pumped even more into the close, up about 5.72% on the day. If the software muffled the bell again, then that is something I'm going to have to try to fix. It's weird, right? We went 5 months without StreamYard doing that to the bell. Last time I did that was like back in December. So I'm going to have to work on that tonight and fix that. That happened in the morning as well. So we did ring the bell. Markets are closed, and we got a lot of earnings now to see and look into. Real quick, let's see how the market closed, and then we'll get into all these earnings. NVIDIA, 117.10, up 3%. Not bad for NVIDIA. The S&P 500 right here, 562. That's up about 0.62%. Meta on the day, we got a 597 close. That's up 1.2%. Amazon, 189. Apple, again, rough day with the Google stuff. They're down about 1.1%. And then Google, a nice little sympathy pump into the close, down still 7% on the day. It was down almost 9%. So Google, one of its worst days since 2024, but overall, a little bit, just a tiny bit of a green candle as we got into the end of the day with that NVIDIA news. All right, let's get into earnings. Symbiotic is down 9%. There you go. Symbiotic is down 9%. That is the first earnings I think we have numbers for. Let me see if I can pull those up. Symbiotic is down 9%. We'll get the numbers in a bit. I don't think there's any other dramatic moves so far. Mercado Libre is flat. ARM is flat. AMC is flat. Oxy is flat. Axon's flat. Pretty much everything is flat. AppLovin, this is a high mover. This was $500 back in February. So this one, I think the implied volatility is about 11% here. So we'll see what ends up happening with that. Carvana as well, they got accused of being a fraud, and there was this big short report. This was the best stock you could have bought in 2020. I mean, I think it's up like 2000x or something crazy, or 200x. It's just been an incredible name. Carvana right here, 261, up 0.86% currently right now. Symbiotic, the one getting hit. Now that's recovering a little bit. It was down 9%. Now it's down 2%. Let me pull this up right here, but that one is getting a little bit of pain right now. Let me pull this up right here. ARM is down. Okay, let me pull that one up. I'm not seeing any numbers. Oh, ARM's tanking. ARM's getting hit. ARM is down 4%. All right, ARM's down 4%. We should have numbers on ARM very soon. I don't have ARM yet, but I do have Axon. I have Axon. Okay, so this company sells body cameras, 141 versus 124. Again, another company beats on EPS. I think we're closing in on 80 to 85% of S&P 500 companies that are beating on EPS. 141 versus 124, and then 603 versus 586. That's a 3% beat on revenues. ARM is down 4%. Axon is down 2%. Axon's down 2%. Okay, so market doesn't love Axon's numbers yet, even though that's a hell of an EPS beat. ARM right here, down 4%. That's the one that I'm going to try to see if we can get numbers. That's a big one as well. That's a semiconductor name, $150 billion company. Fun fact, ARM, or actually the guy, the SoftBank that owns 90% of ARM, the holding company, they sold their NVIDIA in 2019. They made $3 billion. If they had held it, they would have had $150 billion. So SoftBank is now always trying to make their other investments like ARM turn into one that they missed with NVIDIA, but ended up selling NVIDIA a little too early. ARM right here down 4.5%. Let me see if I can get the numbers here. I only have Axon so far. I have Mercado Libre. Nope, I got ARM. Here we go. ARM beat by 6% on EPS, 55 versus 52 on EPS. That's good. 1.24 versus 1.23, beat by 1%. These are not dramatic beats, although revenue is up 34% year over year. That's some pretty good growth. EPS is up 53% year over year. Market doesn't love it, but I don't think they necessarily hate it. NVIDIA is still 117 after hours, 116.88. ARM is down now 6%. Must be something in the guidance that the market does not love. It's good numbers, though. It's not a crazy beat. It's not like a 20% beat on EPS, but it's a modest 5% beat that I don't think the market should be necessarily too upset at. The company that is beating pretty aggressively, though, Mercado Libre, another company with a double-digit EPS beat, 18%, 974 versus 827 on EPS on Mercado Libre, 5.93 billion versus 5.52. That's an 8% beat. Mercado Libre is referred to as the Amazon of Latin America without AWS. Their stock is up, I believe, 7% right here. Mercado Libre, yeah, there you go, 7.43%. 7.43% on Mercado Libre. There's your green candle right there. Not too bad. These numbers definitely would deserve some of the green that we are seeing right now. When are they going to do a stock split? I don't know, but they should. They definitely should. For those that own Mercado Libre, I think the thesis is like a great thesis. I mean, this is a name I just never got into, but I've always felt an Amazon of Latin America makes a lot of sense, and the management and the execution from management is just phenomenal at this company. I've listened to one of their earnings calls before. It's a company you can really trust. Up almost 10% right now, but they have not done a stock split. ARM right here down about 6%. Joby no numbers. Oxy's flat. IONQ is flat. Axon is up 1% now, so that one turns green. Honest is up about 0.4%. Nothing too crazy. AppLovin is flat, and then Carvana is up 2%. Let me see if I can get some more numbers right here. All right, I got ARM, and then I'll try to get some other numbers right here after ARM.
Since revenue, its largest segment, though, is the royalty revenue. That came in at $607 million, which is higher than estimates and driven by continued adoption of its latest architecture, which is called V9, and as well as ARM-based chips and data centers. Its licensing business, though, that fell short of estimates by about $25 million, but it's the Q1 guidance that is causing the stock to drop right now. It fell short of estimates. Q1 revenues of about $1 to $1.1 billion, which is a little bit lower. EPS, I should say, was actually lower, 30 to 38 cents. That's what they were saying for Q1 versus the estimates at 42 cents. And let me know when you want me to come back for Skyworks, too. I have that. And let's do it now.
Yeah.
Let's do it.
Okay, so let me see if we have some other results. I don't have Dutch Bros or Fortinet yet, guys. I think I'll be getting those really soon. I got Zillow. Zillow EPS beat, or sorry, EPS in line. And then numbers on revenue, 598 versus 589, beat by 1%. So Zillow right here for all the people that look up $20 million condos to eventually buy, but you know, in the bottom of your heart, you're probably not going to buy it one day like myself. This company continuing to suck up our attention. Zillow stock right here is down 2.5% after hours. Mercado Libre now up 8%. Zillow down about 3%. Down about 3%. AppLovin, is that crashing? AppLovin, do we have those numbers? Oh boy, that one's down. That one's down. AppLovin, this is a high-flying mover. This was the best performing stock in the S&P 500 in 2024. I know that for a fact. And for those that have kept up with the channel, you know why I know that. AppLovin right here, down about 7.43%. Why is that happening? Let me get their numbers. Don't have their numbers yet. All right, I got 3 of them. I don't have AppLovin, but let's do these 3 real quick. Dutch Bros, wow, EPS beat by 27%. 14 cents versus 11 cents. They are profitable. 355 versus 343 million. Dutch Bros, real quick, that stock is down 5%. Dutch Bros is down. The next one we have is Fortinet Cybersecurity, beat by 9% on EPS, 58 cents versus 53 cents. Revenue is 1.54 versus 1.54 billion. That came in line. Fortinet is down 10%. Why? Don't know, but that's a little weird. I guess guidance is taking a hit. And then Carvana, my goodness, EPS beat of 130%, $1.50 versus 65 cents, beat by 6% on revenue. I have not looked at the stock yet. I'm going to assume it's green. Carvana is flat. Carvana's flat. Wow. The 132% beat probably is tax credits. It's probably something that's not really an earnings beat. I mean, that would be my best guess. But that's a hell of a beat, dude. If you were short this thing, or I forgot the name of the firm. Was it Hindenburg? I think it was Hindenburg. I think it was Hindenburg that came out and said, we're short Carvana. It's like, you know, they had a problem with their accounting and stuff like that. This is a company that was not profitable 4 years ago. They became profitable, and now used cars is a massive market given interest rates are high. And Carvana has been able to capitalize on this. AppLovin down 7% right here. Carvana right here, now down 1%. Let's see if we can get some other coverage on these names. And then we'll keep going from there. Here we go. We got Carvana.
Hey, Morgan, this is a beat on the top and the bottom line, and a beat by a wide margin in the first quarter for Carvana. The company earning $1.51 a share. The street was expecting just 67 cents a share, so more than double what the street was expecting, with revenue coming in well above expectations at $4.23 billion. The metrics within the first quarter: adjusted EBITDA of $488 million, above the estimate of $434 million. EBITDA margin 11.5%. The street was expecting a margin of 10.9%. Vehicle sales better than the street was expecting by almost 5,000 vehicles, selling more than 133,000 in the first quarter, with profit per vehicle better than expected at $6,938 per vehicle. So are they changing their guidance or their outlook? Well, not in specifics, but they are saying that they do expect record sales and record earnings in the second quarter, though they're not giving any metrics to hang on those two expectations. Also, they are now targeting 3 million annual vehicle sales within the next 5 to 10 years. So for Carvana, a big first quarter as they beat on the top and the bottom line. Guys, send it back to you.
All right. Phil LeBeau, thank you. Shares are down about 1.5% right now. Carvana's CEO.
All right, Carvana getting some momentum. It's down 1.4%, even though it had a great quarter. AppLovin is reversing. That was down 10. Now it's down 4. Fortinet, that's down 8. It looks like, you know what? You know about So CrowdStrike today saying we're laying off 5% of our work staff. I mean, kind of obvious, right? Some people thought, hey, maybe they're doing a layoff because before they have earnings, they're going to have some crappy numbers. I didn't go through Fortinet's numbers yet, but if they're tanking on guidance, maybe CrowdStrike also doesn't have good guidance and they laid off some people to soften the blow a week before they report potentially crappy numbers right here. Axon is up about 3%. Fortinet right here down 8%. That would be my intuition on what's going on with Fortinet if it's a guidance issue. Especially because they beat on the top and the bottom. And that might also be affecting CrowdStrike. Palo Alto Networks after the bell. Palo Alto is down 0.29, and then Crowd is, wow, down 5. There you go. All of these getting hit after hours. Is Dutch Bros green? Dutch Bros is trying to go green. It was down 5%. Now Dutch Bros is up about 0.58. There you go. It's starting to go green. There's that green candle. Let me pull up their numbers again real quick on Dutch Bros. I believe they beat on the top and the bottom. Yeah, here's these numbers on Dutch Bros. We got a double beat. Looks like the street's starting to respect it. And then we'll check honest earnings as well.
It seems like the guidance for Dutch Bros is what's setting shares lower. But first, let's go over the top and bottom lines here. Both were beats. EPS coming in at 14 cents adjusted. Street wanted to see 11 cents. And then revenue, a beat here as well, $355 million. Street was looking for 344.7. But it's the full year revenue guide that seems to be weighing on things here. They're now estimating 1.56 to 1.58 billion for the full year. Street was just looking for 1.58. So not exactly a knockout revenue guidance here. Shares down about 2%, Morgan.
All right, Dutch Bros seems to be reversing. Based on what Austin is saying right here in the chat, Fortinet's operating margin is down 5%. That's not good. That is not good. So that could be another easy reason for why Fortinet right here is red, down about 9%. Dutch Bros, there you go. You're green, trying to go up almost 1% on the Bros. I've still never had Dutch Bros yet. I know it's big in Vegas. So when I come down to Vegas, got to try some Dutch Bros, but have not had it yet. Mercado Libre is up 11%. Honest is up 2%. Let me see if I can get the honest numbers and see what we got there. By the way, AppLovin, these are the numbers. So 167 versus 144. That's a beat by 16% on EPS. Again, another company with a double-digit beat on EPS. 8% revenue beat, 1.48 billion versus 1.38 billion on AppLovin. So those numbers, not bad at all for that stock. Let me see. Honest. Let's get that one here and bring it out. Honest right here, up about 4% after hours. They've appointed a new CFO. That's the first thing. And now let me see if I can get the actual numbers on this one. Honest right here, now it's up 6%. All right, this one's starting to pump. This one's starting to get a little bit more momentum based into it. Mercado Libre is still up about 11% right here. And then Fortinet, a little bit of a candle. It was down 9%. Now it's down 7%, but that one's still getting hit. Dutch Bros basically flat right here after the bell. Oxy's also not really moving. Oxy's flat. Usually, I mean, it's an oil stock. I wouldn't expect it to move that much. So that one not doing anything too crazy. Honest right here. Again, it's up 5.42. I'm not seeing the numbers yet. I'm sure the numbers are out. Let me go to their actual website and try to get them from the IR page. But it looks like a beat on the top and the bottom. Yep. All right, here we go. I got it. So $97 million of revenue for Honest. That is up 13% from the prior quarter. Net income of $3 million. Gross margins up 170 basis points to 39% from the prior year quarter, and reaffirmed their full year 2025 financial outlook. Okay, so that's a 13% year-over-year revenue growth, which isn't a crazy growth company. Just saying, right? It's good growth. It's not like incredible growth. So 13% is nice, but it's not crazy. Now, market maybe, wasn't expecting 20%, so that's why it doesn't matter too much. But it's not like that's a super, super high-flying growth stock right there. Gross margins, that's up 170 basis points. That's good. Net income of $3 million compared to a net loss. The company is now profitable, which is definitely really good. That's probably why the stock is green. And then adjusted EBITDA of $7 million. CEO says, our first quarter results demonstrate our solid start to 2025 with double-digit revenue growth, gross margin expansion, and positive net income in the period, reflecting the continued strength of our strategy and disciplined execution of the team. And then they say we remain confident that our long-term growth strategy positions us well to scale across our categories and grow the Honest brand as we continue to navigate the evolving market conditions and manage the impact of economic headwinds. We are reaffirming our full year 2025 financial outlook. So as someone who's not invested in Honest, but I know they sell to consumers, right? D2C. It looks like the tariff volatility has not stopped any of their fiscal year 2025 guidance. So that's bullish. Right? Like if Honest is saying we're going to keep selling biodegradable diapers because we're not worried about the tariff volatility creating more inflation for diapers. I mean, yeah, like at least you got some brands that have enough of a moat to weather the storm, or they just feel that the tariff volatility is not going to be enough for them to get hit really badly. AppLovin, wow, dude, this thing was down 11%. It's now up 15%. It is now up 15%. This name has been one of the most volatile names in the broader market for really for the past year now. I mean, I think it was up 1,000% in 2024, if I'm not wrong. So it was a high flyer last year, continues to be very volatile this year, up 14%. They beat on the top and the bottom. It was a good beat. It wasn't a crazy beat. It was a double-digit EPS beat, which was good. And it looks like the market is starting to reward it. 700% in 2024. Yes, you're right. 700% in 2024. ARM still down 7%. Mercado Libre is up 12%. Joby's flat. Symbiotic, that was down 9%. Now it's basically fat. AppLovin right here up 13%. And then Carvana, that one is down 4%. AppLovin now up 14%. Dutch Bros is also flat on the day. Buffett is still in Oxy. Yes, I think he owns almost 30% of the stock or of the company. And he's probably going to be, taking them private, in my opinion, once he retires. I feel like Berkshire, that's the move they're going for. But they definitely have a ton of Oxy. What else do we see? App again is up 15%. Lords, thank you for the $20 super chat. Thank you for your passion for the numbers. I appreciate you being here. It's always a show we get to do 4 times every single year when it comes to earnings season. We are in the midst of earnings season. We still have NVIDIA coming up. We got through all the big tech companies last week, but we still have a ton of companies. And tomorrow's going to be even crazier. I think we have 20 companies after the close. Daniel, thank you for the $5 super chat as well. Happy birthday, AK Media. It's not my birthday, but I guess it is the birth of AK Media as a joke on this channel now. So thank you for the happy birthday, because I guess AK Media is officially born. Carvana right here, down about 5%. AppLovin up 13%. We have Flutter Entertainment as well. These guys are into the gambling business for sports. Let's get their earnings here right now as well.
His business is quite defensive amid other inflationary concerns. More of that interview on CNBC.com. I guess this has to do with, you don't have to buy the beer if you're just gambling on your phone. The stock right now, as you can see, is off by 1.4%, Morgan.
Yeah, the news since.
All right, here's AppLovin.
Other numbers too here, because it was beats on the top and bottom lines. EPS coming in at $1.67. Street wanted to see $1.45. Revenue, slight beat, 1.48 billion versus 1.38 billion expected. And adjusted EBITDA, a nice surprise here too, $1.01 billion. Street was expecting just 847.7 million. You see shares here reacting strongly, up 15, now 16%. Morgan, I'll send it over to you.
All right, Steve Kovac, thank you. Meantime, Double Line's Jeff Gunlock telling our Scott Wapner last hour that he doesn't think the Fed should cut rates right now.
All right, so AppLovin, again, those numbers hitting very well. We looked at Axon. Axon had a great beat, and that's why Axon, I think they are up a couple of percentage points. They're up about 5%, not bad at all for Axon. This is a company that sells body cameras. Really was underlooked for the past couple of years now, but the stock has taken off over the past year. It's up 92%. Year to date, it's flat. Now it's up about 7% based on this after hours movement. And over the past 5 years, it is up 600%. So one of those companies where body camera demand, particularly from police officers, has started to become higher. And this company has been capitalizing on it aggressively. Uber reported in the morning. Yes, Uber does not have earnings today. I mean, they did, but in the morning. Uber stock right here is down about 2% for the day, but they already reported in the morning. ARM right here still down 7. Honest is down, or no, Honest is up. Honest is up 7. There you go. Got some love on Honest. Trump is not talking after hours. I don't think he is. I will make sure if he is, but I don't think he is talking. If he is, he's going to say some stuff that we're going to have to deal with. He already said a bunch of things today already. Oh, is he actually? No, he already took questions in the Oval Office 2 hours ago. So yeah, I don't think he's talking. Dutch Bros initiates a dividend. Okay, let's go to the actual Dutch Bros website and go through their earnings as well. See what they're saying. Is that a first for Dutch Bros? Is that dividend a first? I think it might be. Here we go. Dutch Bros, 29% year-over-year revenue growth. That is definitely a growth company. Delivers 4.7% system and 6.9% company operated same shop sales growth in the first quarter. Continues momentum with another quarter of positive transaction growth. CEO says our business continues to operate from a position of strength, and we are well positioned to thrive in this dynamic environment. The enthusiasm of our brand, the loyalty of our customers, and the passion of our team, and a clear vision for our future give us great confidence. They opened 30 new shops, 25 of which are company operated, which is bullish. First dividend. Oh, is Matt Money lying? Okay, Matt Money was lying. No dividend. Matt, I trusted you on that one. Matt got it. Right. So no dividend on, that makes no sense too, right? They're growing 30%. Why would they be issuing a dividend? So honestly, I should have figured that out before I ran with that. But total revenue, 29%, 355 million. Systems, same shop sales up 4.7%. Company operating shops revenue up 31.6%. Net income, 22.5 million. This company is profitable. Their net income growth, let me do some math right here. 22 minus 16 divided by 16. That's up 37% year over year. Not bad. 37% year over year. They are guiding for 2025, 1.5 to 1.57 billion in revenues. Same shop sales growth estimated to be about 2 to 4%. And then adjusted EBITDA at 275 million. That's off by about 90 basis points, which is not bad for Dutch Bros. That stock right here, Honest, is up 7%. Dutch Bros is up 4%. Dutch Bros is up 4%. Yeah, I've never had Dutch Bros, but from the people that I've heard drink it, it is a sort of modern take on coffee. It's like energy drinks with coffee. They have muffins and croissants and all this like stuff that's just, they're doing what Starbucks should be doing, which is creating a modern menu that is affordable for people to consume. And that is why they've begun to at least, get more investors interested in them over Starbucks. Starbucks after hours, based on these earnings, is slightly flat, whereas Dutch Bros is up about 4%. AppLovin right here, up 11.28%. I think Ken Griffin is about to be on CNBC. Going to be really interesting to see what he has to say about the broader markets. He's been doing a lot of more public keynotes and talking about the American brand and all the issues that's going on right now. So we'll take a look at what he has to say as well. Okay, IONQ, I don't have their numbers. Let me see if I can pull it up. This one is down about 0.92%. Let me see if I can get their specific numbers right here on IONQ. All right, here we go. Beat by 53% on EPS. Negative 14 versus negative 30. Revenue 7.56 versus 7.51 million. Beat by 1% on revenues. Beat by 1% on revenues. Okay, so good, I guess. They're still not profitable. Their market cap is still pretty aggressive given the pump they had in 2024. They haven't given away all of that pump, although they had a crazy February drop of like 70%, but still they're up hundreds of percent from the lows. Stock right here, 29.15, flat, nothing crazy. If you're a believer of the quantum story, then you kind of don't care about these earnings. You care about the long-term picture. You've had Jensen, Sundar, Satya talk about how quantum is going to play a pivotal role in the future, even if it's 5-10 years away. So, if you're bullish quantum, you kind of don't care about the earnings. You care more about the long-term thesis around quantum in and of itself. Honest, are we moving on Honest? We are moving on Honest. 10.4% on the Honest company. This company's market cap is less than $1 billion, 520 million. So it is the definition of a small cap. 52-week high was 897. The low was 240. If you bought it at 240, you're up basically double since then. I think the last time we covered it, it was at $8 though. I remember Q4, it was at $8 back in February. So it obviously has declined through the tariff volatility, but if they're not getting rid of their fiscal year 2025 guidance, then they feel pretty confident to hit their numbers. AppLovin is up 15% as well. Yep, AppLovin, not bad on this one. That is up 15% currently right now. None of these stocks really had an ugly report from what I'm looking at. The only one that was really down was AppLovin, but that one reversed. ARM is down like 3%. That doesn't matter too much. The rest of these names are either flat or up 1 or 2%. There's not really a big move that we're seeing. Sezzle, this is a fintech, if I'm not wrong, right? SEZL. This one is up 29%. Okay, this is also not a small cap like Honest. It's a $2 billion company. That's up 30%. Let me see if I can get their numbers. I believe these guys are a fintech. And if I'm not wrong, which I could be wrong, they're in the payments processing space, I think. But I could be wrong on that. Sezzle right here is up 29%. By the way, real quick, we got Oxy beat by 14% on EPS. Again, another company beating by double digits on earnings, even if they're slightly missing on revenue. 6.80 versus 6.83 billion on revenue. Oxy is flat after hours. No real movement there. But you have some of these other names that are moving much more aggressively. Sezzle now up 33% currently right now. Hims after hours, she's moving 53, 7% now for Hims. What about Hoodie? Are we still at 50? Hoodie can't hold 50. Hims is crushing through 50. Hoodie's not able to hold it right now. Hoodie 49.88. Hims right here 53.25. I mean, she's obviously squeezing. That's about 30% in 2 days, right? Basically, or 27%. I mean, this is a pretty aggressive move. And now Honest is also getting some momentum. Honest up 12%. Let me check the short float real quick on Honest, and then we'll look at Fortinet. Honest is shorted 5%, which, look, that's not a ton. It's not like Hims, but it's definitely not a small amount. So Honest right there, you got some shorts that could be covering as well. AppLovin short float. Let me just check that real quick if there's any potential squeeze there. I don't think it's high. AppLovin is 5% as well. Okay, so that's not really high, but that's not super low either currently right now. Hims is up 33%, or Hims' short float is 33%. The stock eventually will probably be up 33% given how it's moving, but that short float is pretty aggressive. Honest right here up almost 15% on the day. Hims right here 53.10 currently right now. Okay, let me try to get some Fortinet numbers. Let's get a little bit of coverage on ARM real quick, and then I will get these Fortinet numbers and see what's going on in the world of cybersecurity.
What some will call a weak guide after some solid results. How does that, does the after hours move here in overtime? Is that justified based on this guide?
I think it is. I think the expectations for ARM were pretty high. They turned in a pretty solid March quarter with a little bit of upside in revenue and inline EPS. But the outlook for June is weak by about 45 million and light on the EPS by 8 cents, which I can only attribute that to softness in the smartphone market, as they likely saw some pull in of royalty revenue into Q1. That's cannibalizing their Q2 outlook, and that accounts for the sequential decline. Now, that's in contrast to what we saw from Skyworks, which guided above a consensus by 21 million and 18 cents, likely on Apple's strength. Expecting that is about 70-ish% of their total revenue on overall smartphone revenue. So a bit of a dichotomy between what ARM and Skyworks are saying, but all of it levered largely to Apple and the smartphone market.
Cody, staying with chips, but widening out a little bit here. We've had AMD CEO Lisa Su and NVIDIA CEO Jensen Huang on CNBC just over the past day talking about the impact strategically, competitively of chip curbs, potentially when it comes to China. Here's what they said.
China is an important market. China is a large market, and there's a balance to be played between, sort of restricting certain chips and enabling sort of the larger access to the market, which I do agree that, there's a large opportunity there.
China is a very large market. It's probably going to be a $50 billion AI market in a couple of 2-3 years. It would be a tremendous loss not to be able to address it as an American company. It's going to...
All right, I'm trying to get Fortinet numbers. We have ARM that analyst believes deserves to be down because the expectations were a bit too high. ARM right here, down 7%. It's pretty aggressive right here. But again, expectations going into the print were pretty strong. We've seen this happen throughout the week with Palantir, right? That was a prime example. Expectations were a bit too high, even though had a great earnings, but just was not able to maintain that momentum. AppLovin up 12%. Honest now up 13%. Carvana's down 8%. That one took a bit of a turn on Carvana. So that one completely went the opposite direction. It was green, and then it got hit pretty ugly. Let's talk a little bit more about Fortinet right here. Fortinet, this stock also getting it. So Fortinet and Carvana and ARM, those are the three that are down basically all 9% after hours. So on Fortinet, we have revenue of 1.54 billion, up 14% year over year, non-GAAP income 452 million. CEO says, we are pleased to report another strong quarter as non-GAAP operating margins increased 570 basis points year over year to the first quarter record of 34%, while billings grew 14% year over year. We continue to accelerate our growth strategy by investing in the rapidly expanding unified SASE and security operations markets while strengthening our leadership in secure networking, leveraging our deep expertise in networking and security convergence, a strong track record of AI-driven innovation, a seamless product development and integration through our 40 OS operating system. We have established ourselves as the leader in organic innovation and will continue setting the industry standard in cyber security. So it looks like guidance on that one is the real reason why it's getting hit and why the market is not that happy around Fortinet. Again, revenue right here is up 14% year over year. Guidance, the street wanted 1.63. They're guiding for 1.59 to 1.65. So just in the midpoint of that guidance. Gross margins at 80%. EPS street wanted 247. They're guiding from 243 to 249. Revenue street wanted 676. They're guiding to basically 685. I mean, the only thing that's really an issue right here is operating margins went down from 34 to 29. But I don't think that's necessarily the worst thing in the world for Fortinet. Guidance also doesn't look to be that bad. I mean, it's in the midpoint of what the street wanted. So I'm a little confused why, unless the street thinks that the low end of their guidance is a possibility for what they could achieve, which means they would be missing on Q2 numbers. But I don't know if Fortinet's a company that tends to miss on earnings. I don't think they are. So if you assume they even get to the midpoint, they're not going to miss in Q2. So that's a little confusing why this one's getting hit down 8%. Oh, wow. And that was only GAAP. Non-GAAP operating margins increase. Wow, look at that. So GAAP margins are down from 34 to 29, but non-GAAP operating margins actually increase quarter over quarter, which is eventually going to lead its way down to GAAP. It might just take some time, but that's not a reason, I think, to sell it off 9%. That's a little aggressive here. AppLovin still up 14%. Honest still up 12%. ARM still down 7%. Oxy's flat. AMC at earnings. We didn't talk about AMC. Does anyone still own AMC? Fun fact, my mom made $1,000 off AMC in 2016. Or sorry, not 2016, 2021. That's how I knew we were in a bubble. Like, the fact that my mom made more money than I did in 2021 off the stock market shows you that we were in a bubble, because I could not make money in 2021. ARM or AMC, 58 cents they lost versus 59 cents expected. 862 million versus 837. Okay, so they beat on revenue by about 30 million. They beat on EPS by 1 cent. Stock is up 2%. Basically flat. So nothing really going on with AMC. Symbiotic. Okay, I think I said their numbers. I think they beat top and bottom. Let me pull those up right here. Might have missed them because we have a lot of companies right here. Yeah, I think we missed Symbiotic. Let me pull up their earnings. Symbiotic, remind me, it's a cloud computing company or a robot company. It's one of Serve Robotics is not the same. What does this company do? A warehouse automation for, okay, so they're like they're a robot tech company for supply chain and logistics. That's what they do. So they're like a hybrid between software and robots as well. So let me see their numbers. Let's pull up the earnings right here and see what we got. This stock also down a little bit right here. Well, oh yeah, they were the ones that got Walmart's business. I forgot. They were the ones that got Walmart's business. I always get them confused with Serve Robotics. They were the ones that got, or I think Walmart sold them their entire robotics division and said, hey, you guys can be the ones to navigate it. Symbiotic, a leader in AI-enabled robotics technology for the supply chain, announced the financial results for the second quarter. 550 million of revenue, net loss of 21 million. Last year, they had 393 million in revenue, and they lost 55 million. So both of those, EPS and revenues, going to the upside. CEO says, our execution has improved and our margins have expanded. With stronger project execution and compelling roadmap of product innovation, we remain well positioned to deliver increasing value to our stakeholders. Second quarter revenue grew 40% year over year, and we delivered a record number of system starts and completes. Looking forward, we remain committed to delivering improved execution while investing to support our future growth and innovation. This stock right here is down 2% on Symbiotic. Okay, I mean, look, not bad numbers, 40% growth. That's not horrible, but market right now currently not respecting it for sure. Symbiotic stock, I think these guys are down 20% year to date. Let me see. They are down year to date. Yeah, 9%. Over the past year, they're down 50%. They had a moment in 2024. Then they had a really crappy earnings in August, and then they bought Walmart stuff, and then the street basically thought they were engaging in a lot of M&A. It was going to take them a lot of time to get their numbers in order, but 40% revenue growth is no joke. So it's not like this is a company that is not scaling at all. It's just a company that might take more time to become more profitable. Ken Griffin is going to be on CNBC in just a second. Going to be really curious to hear what he has to say about the broader markets, tariffs, volatility, all that stuff. I think Citadel lost money, if I'm not wrong, Q1. So it's not like Citadel, Millennium, and the hedge funds have been doing as well as some of these other. I mean, everyone, took a bit of a dipping, some pain in the Trump volatility with all the tariffs that we had. Honest still up 15%. Honest still up 15% currently right now. The ticker for AK Media is not going to be Mayo. If it would ever be public, it would definitely not be Mayo. All right, let's get a little bit of an update here, and then we got Ken Griffin coming on in about 5 minutes.
Yeah, 16% move on an earnings report, perfectly in tune with the way this stock has behaved. AppLovin was a year ago about 75. It peaked at 510 at the 2 days before the overall market peak in February. Then it was cut in half in about a month, and it has bounced back to around 300. What it's looked most like in terms of other stocks over the last 6 months is MicroStrategy. So you have this similar situation, battleground stock. You have some true believers. You have some shorts working against it. Obviously, big gains over 6 months, but working to some degree below the highs. It's also, AppLovin is the largest component of a video game ETF. It's a small one, but it's been moving pretty well. It's called the Nerd, and it's 11% of this ETF. And you see what I find interesting about this is that's in contrast to the overall market, which is still several percent below its highs. This one is right back up to the highs. Is it a double top? Is it going to break out again? We'll see about that. And then it's also a large holding, AppLovin and MicroStrategy in the VXF. This is the extended market index. It's
okay. Top 5 holdings are AppLovin, Nintendo, Roblox, Take-Two Interactive, and EA. That's actually not too bad. EA, Take-Two, Roblox, AppLovin, and Nintendo. Those are the top 5 holdings in the Nerd video game ETF.
Everything in the U.S. market except the S&P 500 stocks, and that is lagging. And you see that's often the case when the market has been in risk-off mode until it really gets back in gear. Those types of stocks tend to have more volatility, a little bit less tested, and it still has some catching up to do, guys.
I think they should have called that video game ETF Geek. The Mike Santoli ETF should be Nerd.
Taken.
Yeah.
All right, I'll take it.
All right.
Thank you.
Mike, thanks. Republican mega donor.
See, don't you guys appreciate my humor compared to CNBC humor? I mean, you could either get CNBC humor or you could get my humor. And I just feel like my humor is sometimes a little bit better than CNBC humor. All right, so we're waiting for Ken Griffin. We're going to get his thoughts and see what he has to say. Again, Symbiotic is flat. AppLovin, 16%. Carvana, I don't know why they're down 7%. They beat pretty nicely on EPS, even though it was probably because of a tax credit. So that one is a little weird. Mercado Libre, that's up 10%. AMC, that's up 1%. Oxy, that's flat. Joby, we didn't look at their earnings yet. I'll try to get their numbers, but they are also flat. IONQ is flat. Axon, wow, hold on. Axon was up 5%. Did that one just go away? Axon, no, that's still up 6%. All right, so Robinhood Legend. This thing has some issues when it comes to after-hour percentages. If anyone works at Robinhood and is watching right now, you guys got to fix this shit. Why is it saying 0.02% and on Webull it's showing 6% green? This is an issue. We got to fix this. we can't have the wrong percentages right here. Look at Webull. Webull 6% after hours on Axon. That's green, unless Webull's wrong here. So we got to fix this stuff. If anyone's at Robinhood, we cannot have these on earnings days. So let's see if we can fix this. But Webull right here is up about 6, or not Webull, but Webull was up 13% today, but Axon's up 6%. Webull, I think on the day was, it was up 8%. I haven't really, dug deep into Webull's numbers. I think at this price, Webull's relatively cheap at a $7 billion market cap. It's not too crazy given their growth rates. It was ridiculous at $80 2 weeks ago. But I can't blame anyone for taking a chance on these guys. It's just, I think there's so many other options. If you're looking at brokerage apps, obviously Robinhood I'm biased to, but I think if you're buying pure growth, Hood, even at 50 to me is a bit more exciting Then Webull at 16. Axon right here up about 6.5%. Honest is up 16% after hours. Dutch Bros up 5%. Oxy's basically flat. Carvana's down 5% right there. And then App 11 right here, 15% on the day. Fabio says, dude, I'm glad I traded Webull when I did. There were a bunch of you when Webull was pumping 2 weeks ago in the chat saying, hey, I bought at 20. Should I sell? And it was 47. And I said yes. And if you listened to me, you would have left some money on the table because it went up to 80. But at least you would have gotten some profits, because if you waited, you kind of would have lost everything right here. NVIDIA still pumping after hours, baby. 116.81 on NVIDIA. For those that missed the big news on NVIDIA, they are likely not going to have to deal with the Biden AI diffusion rule that came out 2 days after Biden left office. It looks like Jensen got Trump to reverse it. It has not been confirmed yet, but that is what the stock is moving on. And as a result, the market is very excited right here for NVIDIA. That's also pumping the broader S&P. We should have Ken Griffin on in about 2 minutes, and then we'll get his thoughts on where this market is right now as well. Okay, what else do we have? I don't think Trump is talking right now after hours either. Jake, thanks for the $5 super chat. Would love for you to check out OSS when you get a chance. Curious if there's a crossover with Palantir since they provide rugged edge AI hardware to the government. I will put that on the list. OSS, One Stop Systems. Yeah, I'll put it on the list. I have never heard of this company, but I will see if there's anything there to look at, especially with Palantir. Okay, we got a headline here. Trump's earth-shattering announcement will reportedly be a Medicare drug price plan capping drug prices that governments pays to price abroad. Okay, so Trump promised an earth-shattering announcement yesterday. He said it had nothing to do with trade. Apparently, it looks like it might have to be around Medicare drug pricing. That would actually be a pretty big deal, dude. If they could cap drug prices abroad that governments have to pay for, they could get rid of the surge pricing in regards to different drugs. Now, again, a lot of governments and companies will say that if they have a intellectual patent, then that their IP allows them to charge whatever price they want to charge. This is why Mark Cuban's company, Cost Plus Drugs, is actually starting to get a lot of momentum because they don't really care about IP. They're just selling the drugs at cost and trying to monetize on the back end. That would be that would be a pretty awesome announcement. I mean, that could be pretty freaking cool if that is the way they want to go down. Could pharmaceuticals tank? I mean, potentially. Where's Pfizer after hours? Steve says he likes this one. They're down 1%. That might be on that headline alone. That might be on that headline alone around Trump's earth-shattering announcement. Oh, Costco. We just got April sales on Costco, 7% year over year. $21.8 billion in the month of April. That is pretty consistent with what the street was expecting. So we're not seeing any tariff slowdown in Costco for April. Net sales for the first 35 weeks were $180 billion. That's up 8.2% year over year. The U.S. was up 5.2%. Canada was up 1.5%. And international was up 3.2%. E-commerce was up 12.6%. Costco stock is flat after hours. Not bad. I don't know if that Trump news would affect Hims. I mean, see, this is another reason why I haven't invested in Hims, because when a Trump headline comes out around pharmaceuticals and the drug industry, like, I just don't know enough about it to be like, what impact does it have on Hims? Like, I really have no clue. So it's another reason I've stayed away from pharma, biotech, et cetera, even though I know Hims is not exactly in that range. But if that is the announcement, I'm sure there's some implication on the company. Not necessarily sure if it's horrible or if it could be a tailwind for them. All right, here is Ken Griffin on the Fed and tariffs. Let's get his thoughts. CEO of Citadel. Let's see what he has to say.
The Milken Conference. It's nice to see you and have you on CNBC. Thank you.
It's great to be here today.
So the topic du jour is the Federal Reserve. Fed Chair Jay Powell came out today. I don't think he leaned one way or another, but did warn that the tariffs present risks to higher inflation and also higher unemployment. What should the Fed be doing now?
Well, actually, let's think about what he just said. Presents risk to higher inflation and higher unemployment. The word that evokes is stagflation.
That's a dirty word.
It's a dirty word. And I give him credit for not using that word because it's such a dangerous word. But Jay Powell is doing his best to keep all of his options open to make sure we can try to maintain maximum employment in the United States while mitigating the risk of an acceleration in inflation.
Do you see a risk of stagflation? Is that where we're headed?
Well, there's a risk of it because we are
a high risk of it.
I'd say we have a modest risk of stagflation. And the question will be, if we implement tariffs at the rates that have been proposed, that will certainly be an inflationary shock. Will that shock persist as we undergo deglobalization and move supply chains back towards the United States? That's the real question that none of us know the answer to.
So in your view right now, which presents the bigger risk from the tariffs? Higher inflation or weaker economic growth and high unemployment?
Well, I think that it's important to remember that the president's strategy towards tariffs is part of a three-point strategy as laid out by Scott Bessent. So it's a combination of tariffs, tax cuts, and deregulation. And so the question is, will all three of those come together to give us the growth that we need in our economy? That's the real question we're going to face over the next 2 years.
Will they? I mean, Bessent was talking to me sitting right here, talking about the three-legged stool producing 3% economic growth.
So again, it's going to come down to how high will tariffs be in the end? How deep will the tax cuts be in the end? And bluntly, how much can we deregulate the economy? All three of these are really big unknown wild cards at this point in time.
Gee, so it doesn't sound like you're particularly alarmed by the inflationary impact of the tariffs.
Of course I'm worried about inflation. I mean, the reason the American voters elected President Trump was because of the failed economic policies of Joe Biden and the inflationary shock that reduced the real incomes of every American household. So the president really does have to focus on managing inflation, because I think it's front and center, the primary scorecard that American voters are going to think about when it comes to this midterm election.
Right. I guess the question is how long the tariffs stay. I mean, that's what it comes down to. How long do you think they have here till we start seeing deals?
So we have, there's two dynamics here. Number one is it's better to cut a thoughtful deal than a quick deal. And I do hope that the president and his team really are effective at negotiating on behalf of the American people. The president's spot on right. American businesses and therefore American workers do get the short end of the stick when it comes.
Sorry, 1 second. I was closing some tabs, ended up closing that one by accident. Let me pull that up right here. Griffin not really saying anything that's that different from what we expected, kind of critiquing these Trump policies, even though he didn't like Biden policies. But his argument here is that we just need to have more thoughtful trade in terms of how we implement it. Puts on AK Media.
Could actually make a meaningful difference in helping that to happen. The idea that just manufacturing brought to America will make us more robust in the event of an incident of war is just not true. We need very specialized factories with very high-skilled labor that knows exactly how to build the F-35 or the drones of tomorrow.
And yet here we are with 145% tariffs on things like sneakers and T-shirts coming from China. You warned recently that you see a hit to brand USA, the brand damage. And I just wanted to dig into that a little more and find out what you think the consequences of that are, short and long term.
So, they're of course, it's going to hit in many different ways. If you look, for example, at the attitudes in Canada towards the United States over the last several weeks, the Canadians now have stores where products are labeled not made in America, not made in the United States, right? And when you do that, you're telling the Canadian people are saying to the Americans, we don't want your products. We're losing access to a very important export market because of how we have dealt with Canada. That story is playing out around the world. And what's really unfortunate is so much of what we sell over the world is the sense of the strength of the quality of American-made products and the quality of the content that we produce in the entertainment industry, for example. When we make people no longer have positive feelings towards American-made, whether it's movies, whether it's cars or otherwise, we really diminish the opportunities for American businesses and American workers.
What about the American stock market, bond market, dollar? Questions in recent weeks about whether it's all still exceptional. Or do you see potential damage here to that story?
You know, what's interesting is this. I think this debate's been misframed as Wall Street versus Main Street. It's one country, and almost 65% of all Americans own stocks. So I start with my conversation on tariffs with the fact that all Americans are going to pay with respect to this trade war. But when it comes to finance, clearly there's been a pullback by foreign investors from U.S. equities, U.S. debt securities, and the U.S. dollar. That raises the cost of capital for American businesses. That actually makes it harder to build factories. That makes it harder to invest in our country. That's really heartbreaking. And then with the dollar being weakened, we're now importing inflation into America.
It wasn't supposed to be that way.
No, it was not anticipated, right? The theory of the case from some of the president's advisors was if we impose tariffs, the dollar would strengthen. And it's gone exactly the wrong direction as compared to what those advisors told the president. He was misinformed as to what was going.
The dollar, by the way, up about 0.5% on the day. Ken Griffin taking some shots at Trump. Griffin's a lifelong Republican, by the way. So this guy has not been a fan of the Democratic Party in this country, but he seemingly is also not a fan of the volatility that Trump has been causing.
To happen. And we're seeing foreign capital leave our country and make it more expensive for American businesses to create new jobs and new factories.
Before we let you go, I definitely wanted to ask you about Harvard because you are one of the biggest, if not the biggest donor to Harvard.
Okay, cool. So that's pretty much all we need from Griffin. The Harvard stuff doesn't matter too much. Yeah, so continuing to be upset at the Trump administration. Nintendo is not down 15%. For those that are saying that, refresh your feed. Sometimes there's issues and glitches. Nintendo is flat on my side. Does anyone else see Nintendo down 15%? I don't see that. Nintendo's down 1.83% on my side. So I don't think Nintendo is down that bad. Now, in terms of Griffin's comments, look, it's really interesting, right? Because he's one of the Wall Street guys who is trying to make a market, right? Citadel is a market maker. They do a lot of other things as well. And it's probably been really hard for them to make a market because they don't know how to make this market given how volatile the market is. I mean, when you're a market maker, you are trying to basically outsmart everybody else by getting the cheapest possible spread you can get and maximizing the amount of volatility realistically to the downside or the upside. So why is option selling so attractive to me? Because on a small scale, if you sell options, you are a little bit of a market maker, right? If you're selling, like I know someone who sold, I think they sold like 100 or 200 pound tier calls at like $140 strike before earnings. And they made a lot of money because Palantir tanked on earnings. And whoever bought those $140 calls, whoever they were able to make the market for, the person who was buying those calls, lost all their premium, right? So that's what Citadel does. And they do a lot of other stuff. But obviously, it's really hard to do that when you just don't know what the hell is going to happen. AppLovin right here up 16%. And his argument is about the American brand being tarnished. I think there's some validity to that. But I also think that, hey, you got to go through some pain to negotiate. Now, granted, I think the tariff rollout has been rather sporadic and spontaneous, and we've had a lot of volatility there. But in the midst of all of that, it looks like Ken Griffin is not looking at the positive reinforcements of these trade deals and negotiations. It looks like he's just upset at the volatility, which I understand. Same thing with Bill Ackman, right? Bill Ackman's no different. Bill Ackman was a like 1 trillion% supporter of the tariffs until it really started affecting Nike and Chipotle and all that stuff. And then he started saying, hey, maybe we should have a pause. You know, maybe we should go 90 days to 180 days. So all these guys ultimately care about their portfolios, but they're going to have to deal with an administration that wants a new economic era when it comes to trade. Eli Lilly is down about 3% right here. Is that really off the Trump headline around drugs? Because if that is, that would make sense. But I think that's what's going on right here. So again, the headline is Trump's earth-shattering announcement might end up being that they are going to cap drug prices that governments pay across the world. I'm trying to get confirmation on that headline, but that one right there could be. Oh yeah, here we go. I got it. Okay, so Trump's teased very big announcement looks to be a Medicare drug pricing overhaul per Politico. That's the source. He's planning to revive the most favored nation model, tying U.S. drug costs to lower international prices. Could be a major swing at big pharma ahead of Monday's reveal. Monday is when apparently he is planning to announce this new drug policy. Okay, you guys are saying Nintendo is down 15%. So where can I see Nintendo's updated stock price? It's not on Robinhood. It's not on Webull either. So where do you guys see Nintendo? And why is it down 15%? If it's down 15%, what's going on here? Or is that a glitch? Wait, is it down or is it a glitch? Is it down or is it a glitch? I don't see it. I don't see it anywhere. Some of you guys are saying it's a glitch. Some of you guys are saying it's actually down. In the app on Robinhood? Well, I feel like, well, it's not on Legend. Let me check. Oh, yeah, it is down. I think this is a glitch. I think this is not real. You guys see it on Schwab as well? Does anyone see it on Schwab? Let me check another app. Let me check Public. Let me check them. Let's see. It feels, yeah, they're down. Okay, we've got two companies showing down 15. It could be a low vol glitch. Yeah, that could be happening as well. UNH is pumping on the news. That actually makes sense that UNH is pumping. That actually makes sense. Eli Lilly down, UNH at least getting a little bit of green right here. Lilly, though, is down 3% on that Trump news. Okay, is it a glitch or is it? I feel like it's a glitch, bro. Yes. I feel like this is not because of the new Mario Brothers game. It feels like there's just some orders. You know, sometimes when you put in some orders and there's like only 2 orders, and if the orders have a low bid-ask spread, then the stock just goes down. I feel like that's what's happening on Nintendo. Yeah, it's a volume glitch. I don't think it's real. I think we would get some new. No, it's not on Schwab. All right, so that's a volume glitch. That is not real at all. At least that doesn't seem like it's real. All right, so Trump was speaking an hour ago. Let's listen to what he said. We're going to fast forward from all the other stuff and get straight to Q&A and see some of the comments he made earlier today.
The Treasury Secretary just told lawmakers that a tariff exemption for certain baby items like car seats is under consideration. Will you exempt some products that families rely on?
I don't know. I'll think about it. I don't know. I really don't. I want to make it nice and simple. I'm not looking to have so many exemptions that nobody knows what it's doing. We have to make it very simple, but I'll take a look at it. Yep. Please.
Mr. President, there are rumblings in Washington that some House Republican moderates are opposed to defunding Planned Parenthood in this year's reconciliation package. What do you say to those members, and are you supportive of?
Well, I don't know yet. I have to see, because you're just telling me that for the first time. We'll work something out.
Mr. President, what are you hoping that your representatives will get out of the talks in Switzerland on China? And secondly, what does China need to do on fentanyl specifically? What do you want to see them do?
Well, they have to stop fentanyl from coming in. That'll be a very big part. And I had that understanding with President Xi before I left last time, and we had a deal, and he would have honored the deal. But when Biden came in, of course, nothing ever happened with him. He didn't know what the hell he was doing. But that would have saved a lot of lives. That election cost us a lot of lives and a lot of heartache. The fact that we went through 4 years of misery, and you look at what's coming through the border, and the job of getting murderers out of our country. So many bad things happened. The wars. You wouldn't have October 7th. You wouldn't have Russia fighting with Ukraine. You wouldn't have had that disaster in Afghanistan. You wouldn't have had inflation. All these things would have not taken place. So sad to see what happened. Any other questions?
Is the administration sending migrants to Libya?
I don't know. You'll have to ask Homeland Security, please.
Would you support sending migrants to
Russia was asking for too much to end the war? Given that, do you still have confidence that?
When did he say that?
Earlier this morning.
Well, it's possible that's right. He may know some things that, because I've been dealing with this and some other things, but we are getting to a point where some decisions are going to have to be made. I'm not happy about it. Okay.
Just follow up, sir, on the talks in Switzerland. What do you expect? What do you hope to come out of it?
We'll see. I mean, look, it's we were losing $1 trillion a year. Now we're not losing anything. You know, that's the way I look at it. We were losing with China on trade $1 trillion a year, more actually, 1.1. But let's say $1 trillion. You know what we're losing now? Nothing. That's not bad.
Are you planning a new ceasefire and hostage deal proposal for Israel and Hamas before you head over to the region next week?
Where?
In Gaza.
In Gaza. Well, we're going to see what's happening. There's a lot of talk going on about Gaza right now. You know that, right? So you'll be knowing probably in the next 24 hours.
Are you thinking about actions between the war in India and Pakistan? What's your position?
Oh, it's so terrible. My position is I get along with both. I know both very well, and I want to see them work it out. I want to see them stop. And hopefully they can stop now. They've gone tit for tat. So hopefully they can stop now. But I know both. We get along with both the countries very well, good relationships with both, and I want to see it stop. And if I can do anything to help, I will be there. By the way, unrelated, but I guess it's all related when you look at the world nowadays. Rwanda and the Congo, we've made a lot of progress in getting that disaster stopped. We've had a very talented person over there, and we've made a lot of progress with Rwanda and Congo fighting a very violent war, by the way.
China says in order to have substantive negotiations, you have to bring down your 145% tariffs. Are you open to pulling back your tariffs in order to get China to the negotiating table?
No.
Mr. President, Senator Tillis has come out against Ed Martin as U.S. Attorney. Do you have any response to that?
Well, it's disappointing because, I know Eddie's very talented. Crime is down in Washington, D.C., street crime, violent crime by 25%. And people have seen, they've noticed a big difference. So I didn't know that. But if anybody voted against him, I feel very badly about it, only in the sense that in this short period of time that he's been there, crime is down 25% in Washington, D.C. But that's really up to the senators. If they, feel that way, they have to vote the way they vote. They have to follow their heart and they have to follow their mind.
Mr. President, referring to the Persian Gulf as the Arabian Gulf, are you going to make that announcement on your
They're going to ask me about that when I get there, and I'll have to make a decision.
So you haven't made a decision
I
yet?
don't want to hurt anybody's feelings. I don't know if feelings are going to be hurt. Why have a case right over here? It's called Gulf of America. And I guess a lot of people get ideas from us. But the Gulf of America was something I thought should have been named a long time ago. I'm going to be given a briefing on that. It was just done. And I'll make a decision.
Is it the U.S. position that Iran can have an enrichment program as long as it doesn't reach a weapons?
We haven't made that decision yet. We will, but we haven't made that decision yet.
President,
Yeah.
China said the U.S. initiated the trade talks this weekend and that its position hasn't changed. Are you still confident you can reach a deal with China?
They said we initiated. Well, I think they ought to go back and study their files. Okay, I do think.
Dude, both of these countries, for some reason, cannot stand being the girl who called first. I mean, it is comical that they are blaming each other on being the one who reached out first. Like, we both know you guys need to have a deal. We're not idiots. One of you guys has really cheap labor. The other one has a consumer that will finance going to Coachella. Like, you guys got to work together. But they are so obsessed with seeming like they're not the person who texted first. And it's just hilarious because we know eventually there will be a deal. And then in Switzerland this weekend, hopefully, Basent ends up setting up a framework to get a deal done.
Think that. Go ahead. What do you?
Are you planning to ease chip export restrictions to some of these Gulf countries, and then also make announcements regarding?
We might be doing that, yeah.
And nuclear programs, civilian nuclear programs.
And it'll be announced soon.
You're going to help them develop some nuclear power.
Well, we're going to take a look. We're going to take a look. But, we had really a very good, as you know, we had a very good outcome with the Houthis, and we honor their word. I mean, they made a commitment, and we dealt with other countries that were close to them and their surrogates, and we honor all of their words. We'll see what happens, but I think, I believe that hopefully that's over with, and they'll leave the ships alone, just leave those ships alone. But so we do. We take their word for it. It was, we hit them very hard. They had a great capacity to withstand punishment. They took tremendous punishment. And, you could say there's a lot of bravery there. That it was amazing what they took. But we honor their commitment and their word. They gave us their word that they wouldn't be shooting ships anymore. And We honor that. I want to thank you all for being here. I want to congratulate David Perdue and his family. He's going to be really an incredible ambassador to China. I have no doubt about it. And we're going to work together very closely.
All right. That's it. That's what Trump said. So the main headlines from that were that they were making progress on trade deals. He's not necessarily ready to get rid of those 145% tariffs yet, even though we know he's going to get rid of them eventually. And the big thing that we had today was Jerome Powell basically being as hawkish as you could imagine. I mean, it definitely wasn't dovish, and insinuating that he doesn't know if we're going to have any rate cuts in June. And he definitely did not confirm if we would have any rate cuts for the rest of the year, even though the Fed said 2 months ago that we would have 2 rate cuts for the rest of the year. So it was one of those FOMCs that he wasn't really smiling. He wasn't happy. He wasn't making jokes. He was just trying to get through it. He was pretty annoyed at the questions. He was annoyed at follow-up questions. He wasn't answering any questions about Trump and if he's going to stay on the board of directors, even when he's not the chair of the Fed. So his term ends May 2026. He will still be a board director. So he will still have a vote until 2028 and influence the, trajectory of the country. But if you're not the chair of the Fed anymore, do you want to be on the committee, right? So all those questions he pretty much avoided, did not give us any headlines to make people think in a certain way. Number one thing he said was, we're going to look at the data going into June and then make our decision, which as of now looks like a less than 30% chance for a rate cut. And then finally, yes, the NVIDIA news after hour. Now, look, the NVIDIA news, that's definitely not affecting China, aka I don't think that Xi Jinping is going to allow NVIDIA to sell chips, or Trump's going to allow NVIDIA to sell chips into China anytime soon. However, it could be used as a framework to set up negotiations for selling chips into China. Number two, the Saudis, which have not been able to also purchase chips, might start to get the ability to now buy chips now that the diffusion law is going to get peeled back. And again, the White House has not confirmed they are repealing the diffusion law that Biden set a couple days before leaving office. That is the report. If that is true, you're probably going to have the UAE, Saudi, you're going to have a lot of parts of the Middle East that haven't been able to get access to chips start to get access. China still is just not going to get access until Trump lifts the export control. But maybe if the meetings go well with Besant in Switzerland, that could potentially happen for NVIDIA as well. That's what we got. That is what we got on the day. And then we had a bunch of earnings. Thank you, everybody who was here on the earnings that we had today. A lot of madness. Carvana down 2%. AppLovin up 17. Symbiotic flat. Honest up 9. ARM down 8. Mercado Libre up 12. AMC is up 1.2. Oxy is flat. Joby's up 1.57. IONQ's up 1.39. Axon up 6. Vistra down 4. That was in the pre-markets. Fortinet down 8. Kratos down 1. And then Dutch Bros up 4% on the day. S&P 500 right now is up 0.4. Basically flat from where it ended at on the close. S&P 500, it was up 0.4 on the day. It's flat after hours. So it's down 0.01 currently right now after hours. Tomorrow's Rocket Lab. Okay, hold on. What do we got tomorrow? Dude, tomorrow's going to be crazy, bro. All right, so tomorrow in the morning, we have Shopify, Crocs, Warner Brothers, Peloton, Brookfield, D-Wave, QBTS, and then Hut 8 Mining, which is a Bitcoin miner. And we have Papa John's. And then after the bell, we have Coinbase, Rocket Lab. You're right. We do have Rocket Lab. All right. So that's going to be a big one. SoundHound, Trade Desk, Cloudflare, DraftKings, Affirm, Marathon, Transmedics, which is an organ transplant company, Lyft, Pinterest, Toast, CleanSpark, HubSpot, Monster, Serve Robotics, Dropbox, Wolf, Billings, Texas Roadhouse, Rumble, Stein, Sweet Greens, and Paramount. Tomorrow is going to be crazier than today, bro. Tomorrow. And you guys actually, I mean, out of all these names, I own Rocket Lab. That's the only one I own, I think. Yeah, Rocket Lab. I own Rocket Lab. So outside of that's the main one I'm looking at, but still lots and lots of companies. The one trend we can identify so far, I think it's closing in on 75 to 80% of companies are beating on EPS, and they're beating by double digits. So earnings growth for Q1 is good. I know that's pre-tariffs. That's the nuance, but still, it looks like earnings growth for Q1 was pretty exceptional, quite frankly. And maybe if that can continue into Q2, I think it's gonna be a little tough. But if it re-accelerates in Q3 and we get through the tariff stuff in Q2, then hopefully the S&P 500 and the broader market has a chance to make new all-time highs towards the end of the year. But it's a lot of big ifs. The first thing is we got to get this China deal done in order to even get a chance. AK Media is not IPOing. Dude, this joke is not going to die down. It is not going to die down. I think at least for the rest of the year at this point. You guys are having way too much fun with it. AK Media next week. Dude, I was a minute late to the freaking FOMC thing, and all the comments I see are puts on AK Media. Like, it's just, it is not going to die down. That joke is done. Yeah, seed round beginning. Alex Carp Media, exactly. You know, I noticed my initials are Carps and AK. We're both AK. So I think I noticed that a while ago, but today, I mean, yesterday when I saw AK Media, I was like, oh yeah, Alex Carp. So we both do have the same initials. AK Media Coin will be out of, dude. There's a founder of a company. I'm not going to say the company. I don't want to bring any publicity to this, and I don't want to say anything like that. But there's a founder of a company that I respect. They're a startup. They're trying to scale. They're trying to, survive as a company. They raised some seed funding a couple years ago. The founder had the genius idea of saying, you know what? Let me launch a coin for our company. Soon as I saw it, it was like a week ago, I saw the tweet and I was like, I don't think that's going to go well. Yesterday, coin pumps and obviously dumps. Everyone who's using the product is bag holding, and the founder has to issue this massive apology about why he miscalculated why launching a coin for their startup, which is not an intrinsically bad thing. It's just, if you don't know what you're doing when you launch a coin, there's obviously going to be someone who pumps it up and then dumps it, because who's going to stay around to hold it, right? That's like really hard to do when you don't really have the infrastructure built. You're going to get a lot of people that are pissed off. So I will never be launching a meme coin, but I've seen people do it over and over again. This was a guy I really respected, dude. This was a guy who I felt he was building something special. And then he goes down the route of launching a meme coin, and it's like, it doesn't work. It's not easy to do it. You got to get people, like, the reason like Nvidia is worth 2.9 trillion or whatever is because people hold the stock. If people sell the stock goes down. So like when it comes to supply and demand dynamics on coins, which are not as liquid, but also they definitely don't have the infrastructure of a BlackRock that's holding 500 million shares to be able to make sure there's some support at a certain price. You're going to have obvious pump and dumps. And, when that stuff happens, it just leaves a really bad taste in everyone's mouth. So was it Trump? I mean, Trump's already done his meme coin, that thing. Trump coin got to $80. This thing right now is at $10. So that one is still down a decent chunk, but no, in general, dude, it's just like, that's why I would never launch a meme coin, because I just think it's, stupid to get funding that way. I mean, like, there's some worlds in which it makes sense. Like if SpaceX, for example, launched a coin, it's freaking SpaceX, right? It's backed by everything that SpaceX does. So there's like some validity to it. But if you're a random creator launching a coin, it's like, where's the liquidity? Who's going to hold on to it? What's the value of it? What are people actually investing in? When you have an actual LLC or a C Corp, there's like a piece of equity that people can share ownership in. I don't think the idea of shared ownership via a token is inherently bad. I just think the execution of it 9.9 times out of 10 from what I've seen has been stupid. And every time it's resulted in a rug pull. The Hawk 201 was the most famous one we saw a couple months ago. And it's just usually not something that, I think people should do. So yeah, I am never going to be launching a meme coin. All right, there you go. I think we're done. It was not Pudgy Penguin. It was something else. I don't want to say it. I don't want to, it's something I respect. So I don't want to say the name of it, but I just saw it the other day and I was like, damn, bro. Like that was the last person I thought would launch a coin. And I'm like, he raised millions of dollars from VCs. Why is he launching a coin? Like, it's so weird. It's like you raise a ton of money from these VCs. You got to actually now make money with that money. You have to like build the business. It's really hard to build the business. So, that's why America has the best culture, where we actually fund kids with dreams. And if they fail, it's okay. That in America, we embrace failure. But you don't go the route of making money by saying, oh, I'm going to launch a meme coin and that's how we're going to make money. It's like, no, dude, you already raised money from really good VCs. You don't need to then raise money from your users to have some coin that somehow is emblematic of the success of the product. Because 9 times out of 10, most people are not going to hold on to the coin, you know? So if you're going to do it, it's got to be really systematic, not just this random, all right, let's put out a coin and see if people, you know, actually care about it. AK Grinder coin. Hold on. Before I leave, can we talk? Can we freaking talk about this thing real quick? I wish I bought more. Grinder up 3% on the day, $24. I need to find the clip from 2024 when I laid out the thesis. It was on a market close. There's probably like 400 or 500 of you listening to me. And I think it was in the summer. It was $12. And I said, I think they have a monopoly on gay dating. And then, you know, that weekend I was so inspired. I actually listened to the earnings calls. I went through the financials. I did some due diligence by downloading the product and like played around and just like, you know, I just wanted to see the user experience. That's all. I just wanted to see, you know, what does it feel like if I'm using the product, even if I don't have a personal use case for it. Still got to actually download the app and stuff. And I concluded these guys have a monopoly on gay dating. Stock's up 100%. Like I really wish I did buy at the time, but then I sold at 14 because I got scared and then I bought back in at 14. So my conviction wasn't as strong as it should have been, but like no one's competing with Grindr. No one. Not Bumble, not Match, none of these guys. It is literally their market to win. So. Dude, okay, look, I downloaded the app to see what the app looks like. That doesn't mean I freaking, you know, went on dates or like I just wanted to see if someone like was going to enter into this product. Is this a good product? And quite frankly, originally when I downloaded, there was just ads everywhere. There was like really spammy stuff. So I was like, oh, it's not the best product. But then when I went deeper into my research, I'm like, even with the crappiness of the product and the ads and, you know, the software is not as good. It's like there's a lot of lags and stuff. There is nowhere else for people to go if you are in that community. It's that product. So that's when I realized this stock might have a thesis behind it. I should have bought more, dude. I really should have bought more. It's just for the memes alone. I should have just kept a couple thousand shares and let it ride. So yeah, Mitt went deep. Oh my gosh, dude. Deep research. I did download the app, dude. I like in all seriousness, I needed to know like what the app looks like. But the thesis is that there's nowhere else to go. There's nowhere else to go. And that's why they're growing 30% right now. So there's a thesis there. There is a thesis there. All right, cool. I think that's it. We are done for the day. I will have an actual daily recap episode today. I know we haven't had it in a week because earnings has been insane and I lost my voice. My voice is getting better now, right? It's not as raspy. So the Mucinex I've been taking, which I'm convinced got me high last night, has been working. So yeah, we will have a daily recap. We'll get through a bunch of different topics, including Palantir earnings, and then we will be back tomorrow. You are such a good sport, Amit. Oh, Ira, trust me, I'm used to it. All right, I am freaking used to it. It's like yesterday, the chat is celebrating my accomplishments of being on global TV for the first time, and the day after, not even 24 hours after, you have, you know, what's going on in the chat right now, which is the madness of jokes based on Grindr. But that's why you guys are the best chat in the world. That's why you guys are the best chat in the world. I mean, if anything, you keep me freaking humble. That's for damn sure. You keep me freaking humble. Got to bring you back to earth. Exactly. Got to bring you back to earth. All right. Thank you, everybody. Appreciate it. We'll be back tomorrow on the Market Open. Daily recap later today. I think that's pretty much it. We don't have any crazy updates after hours. We had a bunch of earnings. And yeah, we'll be back tomorrow. Tomorrow's Thursday. Tomorrow's going to be a big day. And then we end out the week with Friday. And then we got 3 weeks left in May. Oh, also, real quick, I got to tell you guys this. So I've concluded, I talked to a couple people during the day. We are not going to be doing a Texas meetup in May. The reason for that is because I underestimated how freaking big Texas is. I'm going to need some more time to plan whether it's a Dallas, Austin, or Houston. It doesn't make any sense. I talked to a couple people today. Houston is too big. Dallas is in the middle of Houston and Austin, or Austin is in the middle of it. Dallas is a little bit farther out. So I'm going to need at least a month to plan that out. The meetup we're going to do for May, and and it's not confirmed, but I'm pretty sure we're going to do this, is Boston. Boston is the one we're going to do. Boston is quicker. It's closer to me. It's easier for me to plan. I've been to the city many times. I have some friends down in the city. I can plan some stuff out there. And I can literally take my Tesla and drive up there. So Boston is what it looks like in May. So if you're in the Massachusetts area, then please come out, even though I'm going to say Boston instead of that word. We're just going to call it Boston. And I think that's where we're going to do the meetup. I'll have more details tomorrow, but we will do Texas. It's just, I need more time to plan it, dude. There's no way I could plan it in 2 weeks, given how big the state is, how much the logistics would be in terms of making the plan happen, and then all the transportation I would have to plan in order to actually make that play out. So we're doing Boston. We're doing Boston. For those that are new to the channel, I cannot say that stupid word, that dumbass word. I don't know who the hell came up with that freaking word. By the way, let's ask ChatGPT real quick. Why is it even called Massachusetts? Why is it even called? Like, who came up with that shit? Who thought, oh, Massachusetts is the name? Like, and I can't say it. My lips don't work in the way that allow me to freaking say it. I don't know what it is, but it's Boston. Oh, was it the natives? Oh shit. Was I just racist just now? Oh crap. Wait, is this why Elizabeth Warren is the senator from that place? Is that why? The name Massachusetts comes from the Algonquian language, specifically the Massachusetts people who lived in the area. It is derived from the words massa, meaning great, and wadichu, meaning hill or mountain, roughly translating to at a great hill. This likely refers to the Great Blue Hill, a prominent feature in the region. Did Native Americans play a role in coming up with the name? Let's see. Is this going to be clipped when I run for president one day? Yes, Native Americans, specifically the Massachusetts people, directly inspired the name Massachusetts. Okay, well, I take back what I said about the stupidity of the word. You know, it's a word that's rooted in deep historical significance. And unfortunately, my inability to pronounce the word is not a testament to the culture of the Massachusetts people who came up with the terminology of this important part of American history. Dude, there you go, baby. This is what a CEO does. That's what a CEO does. He comes out on the spot, off the dome. Apology, baby. Sometimes you just say you're wrong and you move on. That's it. Like Vlad and GameStop. Sometimes you got to say you fucked up. That's it. So there you go. No disrespect to the natives who came up with the name. But in all seriousness, dude, it's a weird word and I can't say it. And I haven't been able to say it for like 5 years now. So Boston is where the meetup is going to be happening. HR of AK Media is definitely going to be contacting me very soon. And yeah, it looks like that's where we'll do the meetup. And a lot of you have reached out over the past couple months saying to do Boston. So I think there's going to be a good chunk of you guys. There's a lot of people in Texas, but the problem is you guys are scattered across the state. So it's going to be really hard to meaningfully plan a meetup without dealing with all the intersections of Texas. Whereas in Boston, you know, I've been to the city many times. I know a lot of the places there. And I think even if it's like 50 to 100 people, we could do a really good meetup at Boston. So the dates I'm looking at are May 24th. May 24th. So I will put out the Google Doc tomorrow. If you're in Boston and you have any ideas on the location, hit me up on Twitter. DM me. I'm open to anyone. That's how I got the Toronto location. Shout out to Craig. He reached out to me immediately. And Craig gave me an understanding of what the Toronto meetup could look like in terms of location. So Boston, May 24th. That's the date I'm looking at. It'll be my first road trip on FSD. I think I'm just going to drive up there with my Tesla. And it'll be an easy one to do. It's about 4 hours from me right now. Dude, and if the Celtics... Dude, I've never been to an NBA game before. To be honest, if the Celtics are playing... If we're at like Game 6, Game 7, who knows? Maybe Celtics-Knicks. That would be kind of a fun game to see. The Knicks absolutely stole the game yesterday. And then the freaking Pacers stole Game 2 from the Cavaliers. So NBA is actually getting pretty damn exciting right now. But yeah, I think Boston will be doing that at the end of May. Tickets will be $5,000. Even the tickets all the way in the back, still, like the tickets in the freaking top part of TD Garden would be $5,000. That would be crazy just for the playoffs. Well, if it's Game 7, that could, you know, it could definitely be pretty expensive. I feel like they max out at like $300-400, even if it's an expensive game, if you have like really bad seats. But If it's game 7, that could be pretty expensive. All right, cool. That's it. Wait, do we have a long weekend? Oh, no, we have a long. Oh, yeah, because that's Memorial Day. Okay, so we have a long weekend, May 24th. Okay, so that's perfect. That's actually perfect. Yeah, I think. Yeah, we don't have Monday off this week, but going into that weekend, yeah, that works. Yeah, Memorial Day is the 26th. Okay, perfect. So if I come on the 24th, that means that's actually really good. That means I don't have to leave immediately for the market open on Monday or for the future show on Sunday because there is no market open on Monday. So that's perfect. So that will be the weekend. The 23rd to the 25th. That is definitely going to be the weekend. And I'll get logistics to everybody pretty soon. But if you're in Boston, that'll be the place. All right, cool. That's it. Thank you, everybody. Appreciate it. I will see you guys tomorrow morning. Daily recap out later today. And yeah, I'll have the details on the Boston stuff coming up pretty soon, and we'll keep going from there. Robotaxi delayed to September. Dude, is this real? You guys are making me stay. That headline is, there's no way Robotaxi is delayed to September, bro. Don't tell me that's a real headline. Don't tell me Tesla's delaying this shit. Okay, I don't see that headline right now, but if that would be an ugly headline if we have to delay the Robotaxi. I don't think that's true. I hope not. That would not be good for Tessie. That would really be bad for Tessie. Yeah, I don't think that's true. Okay, we should be okay. If they don't launch that shit in Austin, we're gonna have some issues. All right, cool. I'll be back tomorrow on the market open. Bye, everybody. Have a good one. See you guys.